Hello, Tasty Nation. Welcome to the show. It's Tuesday, July 7th, and the markets are flat for now. But join us on the YouTube chat. We are streaming live there. Just pop over to the Tasty Live channel. You can see that live video. Throw in your trade ideas, questions along the right-hand side chat, and we will get to them as the morning goes on. My name is Mike Butler. I'm here with Jermal Chandler. And Jermal, we've got potentially a doozy of a day because everyone that's a U.S. citizen that was rooting for the U.S. of A. in the World Cup just might be a little depressed today, a little sad. Maybe the button clicks a little bit less and we see lower volumes today. What do you think about that theory?
You know, I never felt more American than last night. And by that, I mean, amidst the loss, I meant we were so brash yesterday, bro. We just assumed we were going to win. Like, it's not even our sport. You know what I'm saying? Like,
I couldn't name more than 3 guys on the team.
Exactly. Like, it's not even our sport. And we're just like, assume we were going to win.
Yeah.
We just assumed we were going to win. I mean, look, I usually say in these situations, there was no cheating. So it's like, shout out to Belgium. They looked, actually, the one thing I looked up during the game, I was like, how much older are they than us? Because they just looked stronger. Like, they just seemed stronger. They seemed like they were pushing our dudes around a little bit. And, well, as we do these days, I asked an AI agent, and it gave me the answer. And it said our average age was like 26.4, and their average age was like 28.5 to 29. So I think that factored in. It seemed like to me yesterday. Again, I know a little bit about soccer, but I definitely know a lot about sports and aggression. And you could just tell they were just like, they have a little older presence, and it showed yesterday. So, man, it was rough. I mean, not only that, you know, like not only to lose, but then have like Christian Pulisic leave out the game the way that he did. It's tough. It's tough.
Classic.
We just
how about Seattle? I can't believe they got multiple games. I wonder what they did to get that done.
Yeah, I don't know.
But I was there when they had the first one, and it actually is a really good viewing experience because they had an entire stadium like watch party on the dock. So like this whole area where there's these steps that go up to the market and then come back down to the water. And then at the end of the dock, they had this huge projector.
Nice.
So they had thousands of people there. Then they had thousands of people. So they probably could just house a ton of people relative to other cities. Yeah. Because it's all just on the waterfront.
Yeah, no, I mean, that had to be beautiful viewing. I'm not sure. I did see like a chart yesterday. Somebody posted, it must have been Twitter. And I saw something about just how well the local economies where they have these games have done. And by the way, shout out to Chicago, who we didn't have it. We talked about that yesterday, but it was Seattle is the one that benefited the most of all of them. Like just the chart that I saw and just like how it benefited them. So yeah, it looks like things went really well there. And overall, it looks like it was really done well, I would say. It's been great, but yeah, now I don't know. I guess now I'm just like outright rooting for France. I think
feels all right.
I guess, you know, like, I don't know. I'm trying to think. I mean, I'm not rooting against Norway. Norway seems to have captured other people's hearts. That's kind of a dope story. Rooting for France. My mom is a huge France fan. She loves Mbappe. So I guess that's why I say France first comes to mind. But
yeah, I'm gonna let the narrative develop. But Gus will actually be in here in a little bit, and he will have an opinion.
I'm sure he will. Yeah. Speaking of,
he's deep in the numbers.
Deep in the numbers. He is for sure. Yeah, we do have a bunch of stuff going on here. We got you coming up with a math check in a little while. We have Chris with a signal versus noise. I believe he's going to come and talk to us about some Dell and AMD trades that we've seen recently. Liz is going to come and talk about overnight moves. You mentioned Gus coming in first. Her son. Just I'm going to keep that going. I'm not even going to. Gus is going to be coming in with morning movers, and then Liz will come in with overnight moves, and then we will get to the opening bell, of course. Then we have a guest, Ben Sturgill, CEO of Smart Data Trading, come by the show. We got trades with TP. We got Tim Knight with his charts. We got Julia with some research pieces. So I'm sure that's going to end up being a good one. We got Errol also stopping by from the floor and talking about trading ranges that he's seeing. And yeah, we got a great show ahead, so please check it all out.
Yeah, it's going to be glorious. Futures markets aren't really moving too much. Everything's within 1% to the upside. Crude oil up 0.75%. Gold kind of just chopping flat. Downside moves, natty gas. Nasdaq down 1% almost, which is interesting. considering the E-minis are flat. But that's what we talked about yesterday with Kevin from the Nasdaq. The Nasdaq is so concentrated that you're going to get these whippy moves where it could be disconnected from the E-minis when you have sector bounces in different directions with the much more sector diverse S&P 500. But
to that end, I was actually thinking last night, and I know this is off script, but I was thinking last night about the chart that he put up. Remember the one he put up, VXN over VIX, and how other comparable times are like 2017. And then sure enough, yesterday feels like that. We're in a low volatility environment. We just continue to trend higher. It's either that or it's I don't think the crash is coming, but I think we're at a very low vol environment and correlation is like 4 and, VIX is 15. VVIX is 87. I just noticed that yesterday towards the end of the day. I didn't even notice that. So I think it might be time to take some short vol off a little bit.
Yeah. I mean, it's at the bottom of the barrel, VVIX specifically. But yeah, I think right now we're kind of in this lull period, but it feels like there's nothing in the general market that's really spooky to this market.
Agreed.
Assuming earnings go well in a couple of weeks here and nothing crazy happens and the Fed decision coming up goes as planned or as expected. Yeah, it just feels like we're in this lull, summer lull. But speaking of the Nasdaq, did you catch what Jim Cramer said yesterday?
Oh, he's mouthing off again? No, I did not.
Well, I got something for you. And we're going to kick it off with this math check in just a second.
Okay.
The Nasdaq slid hard into the close, and Jim Cramer blamed SpaceX's entry into the Nasdaq 100. If index funds had to buy SpaceX and sell existing names to rebalance, that could have created billions in mechanical flows. Could that pressure spill into today's open? Possibly, but it probably wasn't the only driver. Profit-taking, options positioning, and weaker risk sentiment likely added to the move. If the Nasdaq rebounds quickly at the open, that would point to a flow-driven sell-off, not a fundamental one. So I asked you this question. Do you think that the late sell-off in the Nasdaq could have been a result of SpaceX?
Yesterday? I mean, I didn't realize we sold off.
Yeah.
It's like a whole 100 points in the Nasdaq. I don't know, man. I think it's a stretch. I didn't see that kind of movement.
Yeah.
I would say. It's not to say that it didn't happen underneath the surface, but I didn't notice that kind of movement. I do think it's at some point in time, I do think just from the sheer size of SpaceX, maybe it will have an effect on the indice at some point, but I didn't notice that yesterday.
No. Yeah, I think it was really just reaching at straws. Like, to your point, it could have been the flows could have happened in a way that created that micro sell-off here, but still, it was not big enough to really get the attention of everyone that's paying attention to the markets. And when you look at the difference between SpaceX and the Nasdaq, SpaceX right now is totally flat. Nasdaq is down a little bit, but I think when it comes to these things, the market does a pretty good job of smoothing it out so that there is no arbitrage opportunity in situations like that. So
I don't know. Let's look at a 1 minute chart. I mean, now I want to see this. This is the 1 minute chart of SpaceX or that either one, Nasdaq. I don't know.
Yeah, I mean, it was right at the end of the day yesterday. If we look at 6th and we zoom and we zoom.
Yeah, right there's a close. The big red bar there. Yeah. That's a close.
There you go. So yeah, I think it's just a matter of general movement.
Oh, wait! After the close, all the way overnight? I don't know about that. I mean, you're talking about from literally the close right there. That move.
Yep.
I still don't think so. I'm gonna say no.
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 I don't think the move was big enough, and it's not the continuation.
What does SpaceX do across that same time period? Well, there was a little buying into the end of the day.
A little buy into the day.
There's a little buy in the end of the day. I can't deny that.
Little dippy doing a little rally, but yeah, I think the volatility. So I think the point is the volatility was expected. The SpaceX volatility, like even this rally, like sure this happened technically speaking, but this is a 5-point rally. we're looking at a 10 point, 11 point range for the rest of the week. We're looking at 17 points for the end of next week. So this is expected movement, like day to day, 2 to 3 points, 3 to 4 points, 5 points in SpaceX. Like that's expected based on the current implied volatility. So again, I think sometimes you have these headlines, and yeah, maybe there's a little bit of weight to it, but I don't think it's anything that is groundbreaking in terms of market manipulation, arbitrage opportunities, those types of things, because the market really does do a good job of smoothing out. Like when was the last time you saw a dividend removed from a stock price? It's like it's almost impossible to see. Like it does happen.
It does. It has to be a really huge one for it to be noticeable.
Yeah.
Right.
And there has to be no market movement to offset that. That's really the thing. Is like, yes, this thing could, if there was a flat market and nobody else was doing anything, you probably would have seen something with SpaceX and Nasdaq. But because the markets are constantly moving, it kind of clouds these sort of events.
Yeah,
like this kind of event. And I think a dividend is a really good argument in the same light, where if there's a 50-cent dividend, $1 dividend, the dividend gets removed from the stock price, but the stock price is still chopping. So you just don't see it.
Well, to your point, it's known that it's coming. And again, I mean, the whole world knew that SpaceX is going into this thing yesterday. And yeah, I mean, you do see the buy program in SpaceX, but I don't see the corresponding move in the Nasdaq. We're talking, this was the end of the day. So again, what we saw was from 2:40 p.m. Central Time to 3, there was a buy program in SpaceX. I didn't see a corresponding sizable move in the Nasdaq. But again, everybody knew that this was coming. There wasn't any arbitrage opportunity. I mean, basically, if you bought SpaceX at 155 and change yesterday, then you just wrote it. You were lucky to, and everybody was in there trying to buy it. This is just classic buy and buy and sell movement that you see. I mean, it's classic market related stuff. It's nothing out of the ordinary, I would say.
Yeah, and the arbitrage opportunities are really few and far between. You have to basically time it perfectly. Like that's the thing. If you bought SpaceX thinking it was going to rally because of the inclusion, but you bought it at 162, you actually are down
right
from yesterday's high. So,
which I'm sure a lot of
one of yesterday's highs. So, yeah, I think it's tough. It's tough to pin it all on that, but definitely interesting to see the movement that we're seeing today. But still, we're chopping around. Anything within 1% is basically expected. So, nothing too crazy in terms of movement that's pushing and pulling this thing.
I think this chart shows exactly that. This chart shows like everybody was thinking, oh, they're going to buy SpaceX at the end of the day. And the sellers came and boom, smashed them.
Yeah.
They smashed them all the way down to 155. And then all of a sudden they were like, okay, well, we're going to buy at some point. Are they going to buy? That's all that lull is. Are they going to buy it? Are they going to buy it? Oh, they're buying it. They're buying it. They're buying it. And then you see that.
Yeah. But we'll see what happens to the rest of the market here. Still got about 45 minutes. And before the equity markets open, and the Nasdaq is down a little bit more than the E-minis right now, 0.8 percentage points here, down 230 points. Bitcoin and everything else kind of flat, chopping around. We don't have too much in terms of earnings left.
No, we don't. No, this is really truly that lull period, like you mentioned. We're right before earnings. We got a little under 10 days here. And so I don't know about you, but yesterday I decided to go out and buy a couple of consumer staple things, get some diagonals and a couple of names. Just looking at yesterday was interesting, seeing how tech was moving, chips were moving. A lot of those names were down. I know that's names that we've dove in before, Walmart's, Costco, but yesterday I decided to add to that some diagonals and Colgate Palmolive, Procter & Gamble, and McDonald's. And Target. It's another one. Yeah. So
I like it.
Buying September, sell August. See how it works out. I truly believe that when we do sell off in semis, they're going to rotate back into those type of names.
I mean, we've seen it before. We'll see it again. The rotation is real. It's just a matter of time. It's hard to time them, but when you see the writing on the wall, maybe you start to take a shot here. So all these products are down.
And all these trades were under $1,000. I mean, like the Colgate was $300, Procter & Gamble $700, McDonald's $800, so Target $700. So they're all kind of like in that price point.
Yeah, we do have a guest on the line. The first guest of the day, always our favorite guest. Mr. Chris Vecchio, how you doing? You're muted.
I mean, it'd be fun to stare
might
at
not
you.
Be you. It might be us. It might not be you.
It's not me.
See, that's what he said all the time.
Yeah.
I bet he said it all the time when he was dating. Look, it's not me.
It's not me. It's
We hear you now, though.
most
We
certainly
hear you now.
Oh, well, that's good. Well, yeah, I said you guys survived that storm last night.
Correct.
Yeah, we did. Yeah, it's coming with Wednesday, from what I saw. Wednesday.
Yes.
Right? Yes.
The Austin Powers formation making its way through the Midwest.
The Austin Powers
It
formation.
is actually one of the big things I think in my For You tab that keeps showing up.
Good.
I don't know if it
Good
was.
for you.
I don't know if it's as a result of you letting us know, but it's definitely all in my For You now.
No one has any idea what we're discussing, and we're going to leave no more information out there for the audience.
I think they can read between the lines. There's someone watching or listening.
There's storms coming on Wednesday. What? I mean, everybody's just seen probably. Look at the weather. Take a look.
Just check out your weather maps, folks.
Yep. Chris, what are you doing
How are you
today?
guys?
Doing great.
I'm
we're
dealing
reeling
with my own downpour.
How are you
honestly.
doing from yesterday as a result of yesterday's situation?
I reconsidering my personality if my coworkers think I'm doing like a gopher thing in Bill Murray Caddyshack. But outside of that, what else is there to be concerned about?
Well, I mean, see, you're still so basking in the Knicks win that you probably forgot that the U.S. lost yesterday. You're not even thinking
I don't
about
care
that.
at all. I don't care at all.
You're like, I got my 100-year storm. I'm good.
Yeah, who's the goalie? Tim Rame, 38 years old. I mean, look, the reality of soccer in America is our best athletes go to basketball, football, baseball, hockey, and then maybe soccer. So, this is where we are.
You know what was funny last night is we were watching Little TV afterwards, and I swear I saw like a couple of different U.S. commercials that I didn't even know existed. It's like they got to get them all out the system now because the dudes aren't playing no more. Kind of funny.
Well, there's always next time.
That's correct.
It's like when you're watching NCAA and they're showing commercials, and NIL commercials of like dudes that aren't playing anymore. It's kind of awkward,
They did that in the Knicks Hawks series because you have like Jose Alvarado and Jalen Brunson and Cat in I think a T-Mobile commercial. And so when the Knicks went down 2-1, they're like, oh geez, better get these all out there right now before the Knicks get eliminated.
It happens.
Little did they know.
It's a thing.
Anyway, you guys were just talking about semiconductors here on the dip. Most of these names, STX, Micron, Western Digital, they're all down around 20-25% from their highs. So there has been a meaningful correction in this space so far. But one of the reasons why we're talking about that this morning is because we had Samsung earnings last night, and they were very good. But as we know, the stock is down 10%. They were higher in guidance. They were higher on revenue margins. I mean, just pick something out of the hat. The metrics are going up. But they're also saying they're going to have to spend a lot more money moving forward to meet the demand, that's the cure for high prices. High prices invite higher prices, which invite more capital, which invite more supply, which ultimately bring about those lower prices. So let's just talk about what's happening here in the broader market right now, though. Options traders are now the most bullish in the market that they've been in 5.5 years. The total put call ratio just collapsed to 0.64, which is basically saying that no one's paying for downside protection and everyone is bullish right now. So there's euphoria, dip buying, melt up behavior. Every single pullback we've seen has basically been treated like a gift at this point. So we've been talking about perhaps the Trump trade for a few weeks here. And why am I bringing this up right now? Trump mentioned Dell again yesterday. Did you guys see the press conference where he shouted out everyone should buy a Dell? No. Dell shares were up 6.5%, $15 billion in market value. Interesting. But, a few days before we get our Trump pump here, people are in Dell trying to call the top, which is, I know, the whole point of this options activity, signal versus noise segment here. August 21st, 420 puts, the premium 2.72 million spent with an IV of 77%, which when bought at the ask, 94% of the flow was hitting the ask side. So this was not, just a simple bearish bet here. I think this is someone who's looking to pay up for downside in a stock that has obviously a lot of the zeitgeist wrapped around it right now, thanks to the president's attention. We have another AMD trade here. June 30th tape showing 3.77 million in AMD July 2nd, 557.5 puts with IV at 86% and 75% of the trade hitting the tape. So while AMD had ripped back to all-time highs yesterday, we know that it's been sagging back with the rest of the space here today. We know that the company joined the Trump accounts, matching the $1,000 contribution for employees' kids. And which, by the way, can I take an aside here? If you have a young child who's eligible for the Trump accounts, you're out of your mind if you're not doing it, given how much money you can contribute and how it gets converted into Roth IRA conversion applicable at 18. If you track the index for the next 60 years, your kids are basically going to have their retirement taken care of. So as an aside, definitely save and invest. I take a step back here, though. We're starting to see this unusual options activity right now on the tape, Jermal. Whether or not it's tied to any of the earnings, whether or not it's tied to any of what Trump is saying is another story here. I'm going to take a step back and say these are small potatoes. These aren't the kind of numbers that we've seen in major trades in the past when Intel had that $240 million call buy a few weeks back. And those calls are actually doing fairly well right now. Mm-hmm. These are people who are basically placing a short-term directional bet, looking for a very specific outcome after we've seen this correction in some of the chip stocks. So yeah, it doesn't feel like that the chip stocks are down big because of the run that they've been on over the course of this year. But in technicians' terms, they are in bear markets right now, having collapsed more than 20% from their highs.
I mean, again, these are mostly closer to the asked, which tells you that the aggressive trader is the one who's buying. Obviously, there's a buyer and a seller, but the aggressive trader is closer to the ask. Therefore, you can tell that sentiment is wanting to buy those puts. And look, we've had some big runs. People are going to take stabs at these, whether it's August, whether it's out to September or October in some of these trades that we've been talking now. And again, like you said, these are pretty small, but it just gives an idea of sentiment. There are people out there who are looking for the moment when we start to fade in these names. I mean, heck, I'm thinking about it. I was just talking with Mike. This is an overall market thing, but correlation is very, very low right now, and VIX is low, and VVIX is low, and just those things alone doesn't necessarily mean that there's going to be a market blowout. But I mean, the lower we get, the more explosive the move higher comes for those things, and the more explosive the move to the downside comes. So I can see why people are starting to look at these. I still say these are very expensive options to be buying, though, like buying Dell, buying yes. AMD. I mean, buying put options in there are very expensive. There's better ways to do this, I think. But if you got deep pockets, who cares?
Could I?
That's fair.
You mentioned correlations in the market falling. Can I bring you back to the last time that the Core 1 M index was sitting at 4%? It's actually 3.99% right now.
Was it June?
You have to go back to July 24.
Okay.
Right before the market had a significant pullback. I'm not saying it's going to happen again here, but July 24 rolls around. From that mid-July high to the August 5th trough when we had the yen carry trade blow up.
Oh, last year?
2 years ago, two summers ago. Nasdaq goes 15% down from its high in the span of like 2.5 weeks. So I'm not saying that's going to happen again, but if you start to see a little bearish price action gain traction here, I'm bleeding bullish, to be clear.
No doubt, but that's why you buy those puts.
This is one of those environments where if something bad happens, it could cascade very quickly.
Yes, for sure. Because we always talk about how crowded this trade is. That's always the concern. I'm bullish too. Hell, if we had that move today, that's going to be ugly for my book. I can tell you right now. But that's why we think about how crowded this trade is, because if we do have those days, it could be ugly. But I also hope, and I've seen so far a lot of times when we have the pullback in the chips, it's flowed into consumer staples. So hopefully that's the way it plays out.
Yeah, I think the rotation.
Selling chips to buy chips.
Ooh, I like that.
There you go.
Yeah, I think the rotation is certainly alive and well. And then to your point, Chris, volatility futures are still in a pretty steep contango here. So I like to look at that and just let that be my guiding light. So I'm on board with you buying the dip here. But if you're looking for downside hedges, they are relatively cheap, especially in like NDX or SPX if you make them a little more narrow. But yeah, Chris, appreciate your time. I'm happy that you are unaffected by the football loss. But yeah, we've got plenty more content coming your way on the Tasty Live channel. So join us on the YouTube channel. Let us know what you're thinking in the YouTube chats. Chris, we'll see you a little bit later. And we're going to take a quick 90-second break. You're watching Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
What's up, everyone? Welcome back to the show. My name is Mike, and the markets are down a little bit here. E-minis down 11, Nasdaq down 310. We've got some early movers to the downside, specifically those semis. SMH down quite a bit from yesterday's high, and I'm sure we've got plenty of trade ideas in the YouTube chat and elsewhere for some of these products that are taking a beating here in the early morning session. But I also have Gus in the room here for some morning movers. Gus, how you doing?
Good, always good. Yeah, we got all kinds of movers going on this morning. We got things in Asia that are moving us. We got things domestically that are moving us. It's an exciting day. Kicking things off, I think, with Samsung, which we were just discussing off air. U.S. memory stocks are set to open lower after Samsung is moving down, closed 7% lower at the end of the day yesterday. Obviously, that's Korean markets, not aligned with American markets. They posted an 1,800% jump in profit, but extremely high capex, which has scared investors a little bit. All these memory stocks, I've been saying for months now, it's really hard for these companies to do anything at earnings that's really going to propel them that much higher. It feels like when you do all of this running up, when you're talking about being up 20, 40x year over year right now, what can you really do in earnings that would blow people away so much that you can take a further gap up? Samsung answering that question for us again today. An 1,800% jump in profit is not enough to continue to prop their shares up after this incredible run that they've been on. How mad you got to be if you're a Samsung executive right now? You say we're up, we've increased our profits 18-fold year over year, and the market says, yeah, but you're spending too much money. Let's calm down. So interesting spot for Samsung, and that is going to have a tangible impact on U.S. memory stocks. All these memory stocks kind of move as a unit. I often talk about how frustrating it must be to be an executive at Micron, and you got to worry about everything that's going on at your company, and then you also got to worry about what SanDisk is doing, because if SanDisk does bad, your stock's going to come tumbling down as well. And Samsung, SK Hynix also can play into that equation from across the pond.
That is a good point. I mean, when you talk about how these companies are very similar, if one catches a cold, if one sneezes, the other catches a cold, and so like there is that. There's always that you have to pay attention. But yeah, 1,800%, jump in what revenue?
In profit. In profit.
God, how is it not just completely going to the moon today? Just talking to Mike about how I saw their employees are, I think on average, are getting like $400K in bonuses. So it's been a good year.
I would imagine. I mean, yeah, I've joked about that a lot too. Like you're just a random, say SanDisk employee, and you've just been chipping along, making SD cards this whole time, and everything's good. And you got your little stock purchase program, and got a few hundred shares, and then suddenly the shares go from $40 to $2,000 in what feels like overnight, and you got this giant portfolio you're sitting on. So yeah, good time to be an employee in one of those companies for sure.
Absolutely. And yeah, a lot of these companies are down pretty bad this morning. AMD down 20 points, Micron down 50 points, Dell down 11, SanDisk down 100 points. So we're seeing a pretty broad sell-off here. SMH down 20 points also, which is a pretty big move, all things considered, when you look at the implied move for the rest of the week here.
Yeah, I wanted the Dell shorts yesterday, and I'm kicking myself for not taking them. They moved up because Trump said it's a great time to buy a Dell, and I am the number one proponent of listening to that man when he tells you it's time to buy a stock. He gives you the playbook, but in this particular circumstance, he said that while standing in the room right next to the Dell CEO who just gave $6 billion to the Trump accounts. So I don't know that he necessarily had inside info. Seems like he was just throwing his buddy a lob.
That is funny.
The press, man. He's a trip. He's a trip.
Beyond the move in Samsung, Rivian is taking a tumble this morning. I talked about Rivian on air with Chris and Liz last Thursday because they were moving up. Today I'm going to talk about them because they're moving down. They did beat revenue expectations at earnings. Expectations were 1.45. They came in at 1.56, so slight beat there. However, they are going to sell 75 million new shares, which I don't know if you're counting, but that is not an insignificant number of new shares entering the market. And obviously, the public seeing that as dilution risk, Rivian shares tumbling. I do see Rivian bulls on Twitter saying that this is a very bullish thing for Rivian to do and that you shouldn't fear the dilution. But obviously, objectively, this does dilute the value of each share. And we're seeing them open about 10% lower headed into today. I hope nobody who followed me into the Rivian shorts on last Friday has panic sold their position because we are looking good right now.
I mean, this happens. This happens in names like this that are kind of struggling, and then they have a big move, and then boom, like secondary comes. You know, like offering. It's like happens so more often than not.
Yeah, and Rivian especially. I could go on and on, but we've been in this channel from like 13, 14 up to like 19, 20 for 18 months now. Rivian, it's incredible. Every single time it tests these highs, it just comes flying right back down. So I put the shorts on here. After that last run up, I put shorts on that worked out as well. If Rivian touches 18 until proven otherwise, this is a brain dead short for me. I just immediately put it on.
Yeah, these are the charts you love to see, especially for two-sided action, bulls, bears, neutral traders. You all have an opportunity to make some money in this kind of chart.
From the looks of that, just let me know the next time it gets to 14. And jump in and buy.
Yes, exactly. You could do it. You can absolutely do it the other way as well. Yeah, it's just decisive bounces, fast moves. It's great. Outside of in stories that aren't immediately going to move the market, but are interesting here, Google has thrown $468 million at a European nuclear fusion startup called Proxima. They are looking to get their hand into the nuclear game. Proxima says that they will have a nuclear fusion reactor running by, any guesses?
The end of summer.
When it'll be running by?
Yeah.
I don't know, 5 years?
Yeah. Okay. Pretty good. I heard a correct guess in my ear as well. Early 2030s is what they're saying here, leaving themselves lots of room. So we're talking 4 to 8 years. Early 2030s. Does that mean 2037? We'll see what happens. But yes, Google is confident enough to throw $500 million at them, which I suppose for an AI company in 2026 is pennies.
Yeah, right.
Sure, you can have $500 million. I'm telling you guys, we should start a company. We could. Yeah. You just need to say the right things in one boardroom. But yeah, they are doing Stellarator fusion technology, which is above my pay grade to explain. I don't know. I asked ChatGPT to explain Stellarator fusion technology to you.
The $500 million phrase right there.
Yeah, exactly. Exactly. That's the phrases that we need to get these investments. We also have Alibaba banning Anthropic. They are concerned that Anthropic has, quote, backdoor intelligence risks, end quote. So we've seen lots of U.S. companies ban DeepSeek and the Chinese AIs, saying that they have backdoor security risks and are going to let out internal information. And now Alibaba is going to move their chess piece and say, no, your stuff has backdoor risks. So the intelligence war between the United States and China just continues to wage on here. I don't know that this necessarily is a giant hit to Anthropic's bottom line. Obviously, Alibaba is a large company, but seems like a drop in the bucket of their millions and millions of users at this point.
Right. We see this all the time, man. And you know what? I mean, they're absolutely right. I mean, there's no doubt that there's any backdoor intelligence. There's for sure backdoor intelligence in that, and you can understand why they wouldn't do it. That said, Alibaba being on these lows, we were asked about that the other day. I just staying away from the Chinese names. Not really. I don't care. Even though this chart looks like the lows of what we saw with Rivian, it's probably something decent to get long, but I'm not doing it.
Yeah, I agree. Like you said, it's an attractive chart, but you got to show me something. I don't disagree with the reasons that we've been sliding either. Are we really going to put in 2-3 year lows? I don't know. I don't know that there's too much downside left in it, but I have no conviction about Alibaba or really any of the Chinese names whatsoever right now.
Yeah. I feel like Baba is just one of those products where it should have 100% IV at all times. Like there's so much political risk with these products that the 50% IV is just too low. Like there's not enough premium here to sell if you're doing undefined risk trades or even defined risk trades. And if it's working for you and you're doing it, that's great. But like if I'm going to get involved in a product where I know there's political tension, there's political risk, I want to see 80, 90, 100% IV like at all times.
Oh, yeah.
Because we have so many other products that offer that don't have the same political risk.
Yes, and Alibaba is chief among them when you talk about political risk. If something happens in China, Alibaba is the name that people go to, even when these ETFs exist and things. It's like Alibaba is China in a stock market context. This is what people turn to. It's the vehicle for that country. With so much overhead political risk, it's hard to get involved.
Yeah. Do you have another?
I was gonna I'll rattle off.
Yeah, because I don't want to mess it up.
Yeah, I'll rattle off 5 here real quick, just because Jim Cramer has given out 5 stocks that he says you need to buy during this market rotation. So just to put all of these on everybody's radar, whether you interpret that as bullish or bearish is up to you. But the 5 are Johnson & Johnson, PepsiCo, Starbucks, Constellation Brands, and TJX.
I actually don't disagree with Oh, damn. I was ready to lay into it. I actually do not disagree with him. And the reason he is saying it is because of the rotation that we have seen happen at times. He's actually right on that. I will give him that.
Jim Cramer, Jamal Chandler, these JC initials. They're aligning against us.
No, but he's saying that because if you look at yesterday and you see the heat map of yesterday, chips were up and those names were down. You see it. I mean, Target, TJX, Johnson & Johnson, Starbucks, like those names are down yesterday. And we've seen the other days with the chips. We'll see what happens today. And I won't be shocked. It's exactly what's going to happen today. Just looking right now. If this day continues the way it is, with SPOOS is down, Nasdaq is down, what's up? Russell 2000 is up, Dow is up. So you can bet your bottom dollar that some of those names that were mentioned are going to be positive today.
Yeah, almost all of these that I'm pulling up are positive pre-market, at least a little bit. So, yeah, craziness.
But see, that's the thing, guys. We're telling you the exact same thing some dude up in the CNBC forever is telling you. We know what we're talking about. That's all.
Have you seen the inverse Kramer fund?
Yeah, right?
They shut it down.
Yeah.
It doesn't exist anymore.
No, I think the sector rotation is a sharp play for sure, especially if the semis continue to show weakness like we're seeing now. And we're seeing the precursor here with the Dow and the Russell up at least half of what the Nasdaq is selling off right now. So I like it. Well, Gus, appreciate you as always, and keep bringing the heat. Bring those tickers, those flaming tickers that we can take a look at. But yeah, I think the products we looked at today, there's always going to be opportunities, and Rivian, an interesting short. And I hope that works out for you and fattens the pocket. But yeah, we've got E-minis down 11, Nasdaq down 300, and we're going to see what the rest of the market brings us. We're going to take a quick 90-second break. You're watching Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
first thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Show. My name is Mike. I'm here with Jermal. Join us on the YouTube channel, if you will. We've got tastylive streaming live. You can throw in your trade ideas, questions. Along the right-hand side chat, E-minis down 12, Nasdaq down 300. Liz is on the line. And Liz, I have to confess, I'm done with zero-day iron condors. I am only doing Super Bowls from here on out. They just they hit so quickly. And the iron condors I've been struggling with these big market moves to the upside. So I think
I gotta tell you, I mean, I'm like I said, I'm merging everything together. And good morning, by the way. But I'm merging everything together. But I think I'm learning from everyone that I'm on the show with during the month of July, in honor of Mike and Chris Vecchio. I'm doing Super Bowls. The second we get out of July, I'm going back to iron condors.
Makes sense. I like it.
Yeah,
I like it.
Yeah.
Yeah.
I'm learning from everyone that I see except for Jermal. Shame on you. I can't believe you're on crazy.
Well, Jermal's fully aligned with Jim Cramer today. So
that is pretty funny. Jermal, Jim Cramer, shocking.
I mean, I don't know why we're the only ones to see it. I mean, this is the kind of market where if you just pull up the heat map every day, you can see the reds and the greens and they just shift around. I mean, that's what's been happening, right? And everything works until it doesn't. There's going to be a day when it's all red. Doesn't matter what you're long.
Yeah.
But right now, there's been the rotation. I actually love that there's a rotation. It's a much more fun market to trade.
Well, that's why nothing's really falling, because as one rises, another one falls, and so on and so forth. So you are seeing that rotation. So I am saying shame on you, kind of kidding, but I heard you buy Johnson & Johnson and Pepsi this morning, so I was like,
I bought yesterday. I bought diagonals in McDonald's and Procter & Gamble and Colgate Palmolive. Isn't that what it is? CL? Yeah, Colgate Palmolive.
Yeah, it's Colgate Palmolive. That's correct.
And then Target. Those are the ones that I did. And I had a T-Mobile short put. I actually rolled that to August. It was July, but I decided to roll it to August. Why not? So again, all of those trades are essentially the things that have gotten sold off when the semis have been up, and you've seen some rotation back into them the other way when the semis are down. We'll see if that holds today, but just wanted to get some exposure in some of those names.
No, I mean, I understand the rotation. Can I jump back into SPX? Oh, good. You're on SPX, Mike. So kind of springboarding off of that. Like I said, I'm learning. I'm old. I'm learning new tricks. I'm a fan of how you set up your Super Bowl. I'm a fan of Chris Vecchio's seasonality. But you know what? You want me to add like another layer onto what I'm doing for the SPX Super Bowls?
Sure. Bring it.
So I've been taking, like I said, keep in mind, I'm in charge of managing my son's account while he's in Norway right now. So he's going to be very happy with me when he comes home, because I've been looking at the SIBOs most active on the SPX, and I am structuring the Super Bowl around where the most active calls are, which is kind of a self-fulfilling prophecy. Like yesterday, there was 120,000 at one level. And so I put the strike one above it. And this was later in the day, but right now I kind of look at what's happening. The 7550 is where the most calls are going right now.
Makes sense.
So if you structure your Super Bowl wrapped around 7550, making that either your long or your short strike, it's kind of nice. You're getting it from all sides. Good setup, seasonality's there, and there's lots of players in the game.
Love it.
Yeah.
Yeah, it makes a lot of sense. And yeah, I think for these, I'm either selling a 5-point wide spread to buy a 10-point wide, or I'm selling a 10-point wide to buy a 10-point wide. Just depends on the setup. But this one, I'm working for 25 cents for 5-point wide put spread to buy a further out of the money 10-point wide call spread. But again, if we get a 20-point reversal in the E-minis, it'll appreciate enough to where you can get hit with a $200 win or something like that.
So these have been, Mike, the one you put on yesterday and the ones you've been putting on, and I'm not saying leave them. I'm not advocating that by any stretch. I like that you're taking the profits in here, but all of them would have been full profit.
Oh, yeah. They've all just moved directly in the money. It's been crazy.
Yeah. Well, because Christmas in July doesn't end until the 9th.
That's true. But yeah, I think
these are 2 days left of it.
These are really good revelations in terms of getting the speed that you're looking for in SPX with a really small risk tolerance for the 0 days. So when you pair these short puts with call debit spreads, like literally you just need a 10-point move, and we see that all the time. 10-point moves in both directions, and you get the speed that you're looking for without having to wait to the end of the day. That's one of the sometimes frustrating things with the iron condors that I've been running into is you get the 20-point move, and now you're dealing with a marked loss until the end of the day, or if there's a sell-off. So
Yeah.
Right. So I was going back and forth with Julia yesterday, and I hope I'm not letting any cats out of the bag because, well, I mean, we do call her the black cat. But so we were going back and forth on teams. So the 0 day DTE SPX kind of was our forte because we got all that research from Jacob back in the day. And she was asking if there was any credence, because people have been asking this in the chat, in closing whatever you do at noon. And we were going back and forth on this. And Jacob did do a study a long time ago about saying when you're selling premium. So it's not this. This is a different version of the trade. You're selling, but you're also buying. So it's a little bit different. It's defined risk. But there was a study that he placed a while ago saying that if you are just selling premium one side, meaning like just the put spread or just the call spread, if you don't get the move you're looking for, close it at noon. And that was kind of interesting because you're holding it. You're either holding, if it goes down, Mike, when you're looking at this, if it goes down, you're just holding it. You're on the wing in the prayer program, hoping it's going to pop back up. But so it's much less of a loss. Even if this is in between your spread, your put spread at noon, it's going to be what, $100 loser, if that.
Yeah.
So there was some credence in that. Close it at noon. If it's one-sided, if you're bullish, or if you're bearish, if you've got the one side on.
I think a study like that just kind of lends to less of a trend and more of risk management, consistent risk management. You know what I mean?
Yeah.
Like I think that's kind of what that lends to. I mean, it's just like, I think, just kind of consistently saying, okay, I put on for this reason. It didn't happen. Close it this time. Close it this time. And then I'm sure there's going to be outliers where sometimes you close at the time and it's actually really winning or really losing really bad. But either way, I think it just smooths out if you continue to do the same thing,
For sure. But it's interesting because if you could trade mechanically, which I can't, right? So I'm too emotional. I've been doing this my entire life. I have opinions, strong opinions, right?
Wait, what? I thought you were pretty mechanical. What are you talking about?
No. But watching my kids do this, because they don't know what they're doing, they're crazy mechanical. So if I say you put this here, you put that there, you put a GTC in, walk away, don't look at it again until noon. Because they don't know what it is. They don't have the feelings that I have.
That's fair.
You know what I mean? So there'll be days when I'm like, okay, I can't put this on right now because we're spoozing around 50. Why in God's name would I put this on? And I'm looking at their accounts and they've got it in.
This explains so much now when you're like, what do you want to take out of it? That's what you're telling yourself. That's what you're thinking. You're like, what do I want to take out of it? You can't put on like a trade and just like kind of sit and watch it and see like where it's going to like maybe kind of like those call calendars that I was doing, right? Not calendars, but those butterflies that I was doing, like one in SanDisk. Like you're like putting it on and you're like, I'm thinking I'm going to get XYZ out. You're not going to sit and watch it every so often.
No. When I put on the trades like you're doing, like those, like what Mike's got on or your butterflies, you guys kill me because I'm going for all or nothing. Like Mike with his $100, I was like, what are you doing? You need 500 here.
Yeah, it is. It is a dangerous game to play, these Super Bowls. But no,
Yes.
I do like the closing at noon, especially if you've got your credit spread in the money, because the extrinsic value remaining in the 0 day from at noon helps you realize much less of a loss than if it was at 2 o'clock. And we've shown one of the most interesting research pieces for the near term 0 day stuff that I've taken away is that if you have existing positions on between the 2 and 3 p.m. final hour of the day, you take on a ton of risk. Like a lot of your win rate and a lot of your losses come in that period of time, which makes sense because we see tons of flow in the morning, tons of flow in the afternoon, and you can see the whippiness between 2 and 3 o'clock, especially for iron condors at the market. If the 2:30 buy button is enabled, which we've seen many, many times, where the market just rips up 20 points at 2:30 p.m. exactly, that's not going to be good for your iron condors. So, I like these Super Bowls a lot. Just route them for a credit. That's the biggest key, I think. And
well, I know we've talked about these a lot, but I see somebody in the chat asking again, what is a Super Bowl? So why don't you go ahead and fully explain it?
Yeah, so Super Bowl is just the concept of selling something if you're bullish, selling something like a put or a put spread, taking that credit, giving all of it up and buying, or I should say most of it up and buying a call spread with the premium you're collecting. So this put spread, if I just replicate the same strikes that I'm working, giving me $1.50 credit. So now I can go buy a call debit spread for less than $1.50. I still have a net credit here, and I have the ability to enter this trade for a credit, and if the market rallies, exit this trade for a credit, because my short put that has a lot of value now, if the market rips up 20 points, will have a lot less value, but my call spread that has less value now will increase in value. So you're selling something to buy something else, and they both move synergistically from a directional standpoint. So that's all the Super Bowl is. I do this in SPX. I have one in SpaceX. I have a short put at 125 that I sold for $3,075, and then I bought a 300 strike call in January for $300 less. So this is another one, Super Bowl setup, short put to buy a call, but I collected $350, so I have no risk in the middle. And if we get that explosion to the upside in SpaceX, this trade is going to be a massive winner. But I still, again, have no risk in the middle. So it's not something I'm worried about. Same thing with SPX. 5-point wide in terms of risk, but a 10-point wide long call spread. This is the one that Liz is saying, just got to let it go in the money and take all that money. But I'm probably going to
Mike, listen. Let me talk you into it, Mike. So let me talk you into it right now. Number one, you're positioned perfectly with your setup above where that 7555 is the number one. Number two, you've got a good profit potential here. Number three, it is only July 7th and Christmas pop. As Chris has told me, Chris Vecchio, are through July 9th. Today's the day we let it go, Mike.
Today's the day, huh?
Well, I'll tell you this. If the Nasdaq reverses, if we go from down 1% to flat, I will leave it on because I think that would be a precursor to a continuation to the upside in both the E-minis and Nasdaq. But if we see the Nasdaq chop around here and maybe we see the E-minis flipping and flopping, I might put in a profit target for $200. But either way, I do agree with you. The nice thing about collecting a credit is that you don't have that neutral fear of like, if this doesn't move, I'm going to lose this money, which is the case for other debit trades where you need the directional move. In this case, I technically don't need the directional move. I just need the market to not be down 30 points or 40 points, and the spread will still expire out of the money, and I'll be able to keep this credit. So that's another kind of hidden importance of routing this thing for a 20 cent or 25 cent credit, or even a 10 cent credit, 15 cent credit. It's just that you have no neutral risk. If all of these options expire out of the money, you keep that small premium and you're good. It's a different feeling than if I were putting this on for a $200 debit, where I know that as long as the market chops, I'm going to lose $200 today. That's not the case if you route it for credit.
That's true. It is a good setup, and it's a good product to trade. I kind of like what you're doing, opening it pre-market, right?
Yeah, because you get that potential for a chop. Like we saw that yesterday. We saw an open like that, and we were up 10 points, and that spread was up like $150 right on the open, like minutes after I placed it. So it could work in the opposite way, but to your point earlier, we have so much time in the 0 day that even if the market sells off 20, 30 points, you're not going to see max loss because there's so much extrinsic value in these options. It's going to prevent you from realizing max loss. Just like a call debit spread, if you get the move in the money, but you still have a lot of time left, you're not going to realize max loss or max profit because all the extrinsic value prevents you from seeing that. So,
Yeah. I do want to state for the record, though, people can flip the cards over. I'm not saying sell this. I'm saying if you wanted to, you can buy a put spread and finance it with a call spread. So if somebody had the desire to be bearish or a quick pop down in the market, which happens too in SPX. That's just it. It's like you do get the pops down as well. That's what's great about this game. You can flip the cards over, and if it's set up like this, everybody can make money.
Yeah.
Yeah. And in that case, I think you consider like similar to what you talked about, like try to find areas that maybe have high strikes or just areas that are really I would say where a lot of the volume might be concentrated. In this case, it could be 75.25. I mean, it could be 7,500. You're just not sure. And then I think when you do that too, you have to just determine, on the conservative side, the expected move. In that situation, like obviously 7,500 is an area, but are we really getting down to 7,500 today, right? Like you got to think about it in terms of that, and that helps you determine what expiration and which strikes you use. There is kind of a dance, I would say, in putting these on.
I mean, it's kind of fun to use all the tools in your use all the clubs you've got in your bag to kind of set them up. Is it going to work every time? No. Does it make me feel better knowing I got these levels? Yes. And Jermal, I just looked at the CBOS list. 7,500 is the leading put on the board right now in the 0-day TE.
Sounds about right.
But it's round numbers. It usually is round numbers.
But something you said really stuck with me. Look, I mean, I don't always use all the clubs in the bag. I get comfortable with a couple of clubs. I mean, now that you mentioned it, I don't even use my 3 and my 5 anymore. I'm using the 4 hybrid right now. So this is actually the 4 hybrid. Like ever since Mike gave me this club, man, these things I put these things on quite a bit. These Super Bulls and Super Bears. I honestly never like structured a trade like this prior to us linking up, and like I structured quite a few of these. As I've mentioned, I got a bunch of Super Bulls and the software names. Like it's the easiest way for me to play them and not go completely crazy because of the way that these names have traded. Like it's like very risk defined. I feel I got it a couple months out and I don't worry about it that much day to day.
Well, the other thing about structuring them a little bit farther out in time, Jermal, is that, if you're going to and I think Mike hit the head on this, if you're going to buy a call spread, sometimes it's like watching paint dry. Even if you get the move up, you're not going to get out. But when you structure it where you've got that put with it, you can get out a lot quicker because you're going to get a little bit of profit potential.
100%.
So, yeah.
Speaking of golf clubs, my girlfriend was like, I need an iron, but I need it to be like more distance because she only had a 7 iron in her truncated bag. So I was like, well, we got to get you a 5 iron. So we went to secondswing.com, my favorite website.
I've gone to Global Golf, Global Golf, but I haven't been to that one. I've heard of Second Swing. Though.
It's really good. I mean, you buy used clubs for 50% off, but they're all like mint condition. You can structure it by the quality of the club, and then you can get it regripped. So we got it. She was smashing that club. I was like, I guess I got to buy a new putter now. So I bought a brand new putter.
It happens. I learned more about golf from doing that, from buying a club than I really had. And guess what? I'm branching an AI agent once again. I did use ChatGPT. I told it a bunch of things, and it asked me some questions, and it really did help. But it's dope.
Yeah, love it.
Have you two golfed together?
Not yet. We need to, though. We need to.
We will.
Yeah, we will.
That's what I was going to say. I was going to see who can swing farther.
Oh, he probably can swing farther than I can. I'm not. I'm learning. I'm easing my way.
Hybrid. He said he's only on the 4 hybrid. Yeah, I think this market is going to be interesting. I want to get filled before this market opens. We got a minute left here. Can I get filled for a 20-cent credit?
So while you're trying to get filled, I do think, just once again, these are opinions. This should mean nothing, but I think this market might turn around. We do have SpaceX going into the Nasdaq 100 today, but I heard it's only going to be as big as it is, it's a very small portion of the Nasdaq 100 because something about the volume. I'm going to have to ask Chris about this. It's got to have X amount traded before they can put it in as a larger percentage. If that's
interesting.
That's even because Jermal, I heard you say it didn't move the Nasdaq needle too much.
I mean, not really. I mean, if you saw the 1 minute chart from yesterday, it was just like, it just seemed like a normal type of pullback that you would see after a day where we were mostly higher and eventually pulling back. I don't know.
Yeah, it's kind of crazy.
All right, they're not going to fill me, so I'm going to crank this back up to 30 cents.
They don't fill me. This dude,
just in case we see a little sell-off here.
We used to trade with at our job. Turkish dude. He had an accent. He was like, "They don't feel me. They don't feel me on my trades." Used to make fun of him all the time.
Spoos are down 11. I mean, I think we're gonna go green today, Mike, and I think you're gonna get out of this Super Bowl for a full profit.
Oh.
Let me see the delta on your long. Your long delta's a 9, so you got a 20% chance of keeping all of it.
Hey, that's a pretty strong chance. I like that. Oh God, here we go. It's ripping. Oh no.
Yeah. Oh, did you miss it? You didn't get filled?
Swing and a miss.
Uh-huh.
Swing and a miss. It happens. Oh, let's see what's
I'm chasing
here. Micron. How is Snow up? Oh, you know what? Oh, guess what? It's software update today. That's what it's going to be.
It is software update today. So my question is, if you are cyclical, and yesterday you went into all the Kramer stocks, today are you going to buy the semis that are down? Are you going to be bullish in them?
You were probably already long them. Maybe you closed some yesterday, but you're probably still already long those semis, and you're long those cyclicals. Or maybe I'm just talking about my book right now because that's exactly what I got going on. The McDonald's is working. The Procter & Gamble is working. The Colgate is working. Walmart is working. Microsoft CRM is working. Netflix is also in that space too, by the way. Not space, but it's getting lumped in with all of those things. On the days where semis are down, they come and they buy Netflix, they buy Walmart, they buy Microsoft and CRM. This is a trip. This is not going to last, by the way.
I hate Netflix. I hate Netflix. I hate Netflix. I will never trade it again.
Really? You done with it? Why would it do? Oh, is this from like a long time ago? Or is this since the split and the way that it's traded since then?
No, it's from a long time ago. I got Netflix and I will never touch it again. It's one of those stocks.
Emotional trader, huh? I didn't know this. Let's unpack this. Why? Is Netflix in the room right now?
Yeah, Netflix is all around me.
Netflix.
It's just one of those stocks that I just don't think it's worth trading. I mean, for those of you who trade it well, great.
Ouch.
But I mean, it didn't do it, right? It split and then it just continued to go down too, but it did hurt me before the split, but I did watch it.
It did hurt me before the split.
Yeah, I was looking at the micro Nasdaq here. Still plenty of premium here, so I'm just going to leave this, let this thing decay even more.
Yeah, same. I'm still in that same expiration. I haven't rolled yet.
Yeah. I think we need some more liquidity to fall into the next cycle, or we make an adjustment here. But Microsoft up 7 points right now. Very interesting to see. Love to see it.
Yeah, but yesterday was down 7 points.
Yeah. Because semis are up.
Indeed.
Yeah.
Here's another Super Bowl. 20-point wide put spread to buy a 40-point wide call spread. And we put this on 12 days ago. It's up 1,100 right now. Because you get that speed if you go directionally right.
So you tell me you're up $1,100 on the trade and you're not taking it off?
No, because this one's 45 days out. We had this one in.
Like, you're so confusing to me. It's not even funny. Like you're going to take $100.
No, you let that run a little bit. Yeah. You got time on that thing.
Longer term stuff. You let that stuff run.
You know how down Microsoft is?
Yeah. We've had this one on for 100 days, the 500 strike calendar, but this is a really long-term one. Out in January, the long option, and then the short options in September. And we bought that for $500 when Microsoft was at like $350, something like that.
The heck is on Costco? I don't know.
Are you going to continue to roll your short?
Yes, if we get to September, then I'll roll it to October, November, and I'll probably stop at November. Just keep some distance between the short and long option. But I'm playing for this thing to go back to 500 before then. In which case, all of these trades will be nice win. But I was filled on that Super Bowl. It's not looking great right now. 75.20, 75.10 put spread to buy the 75.50, 75.60 call spread. So I moved the call spread in a little bit and I widened the put spread, but still 20-cent credit. So neutral in the middle, and any kind of reversal, this thing will be good.
Any kind of reversal, but we seem to be sliding a little bit right now.
Mm-hmm.
That's probably why you got filled.
Yes, for sure.
Yeah.
For sure.
You get the download view. Looks like
what else are you looking at today? You have anything on your watch list?
I was kind of looking, I wanted to dabble back in airlines, and I kind of looked at those today, and those are really high. All the airline stocks are pretty high right now just because they're kind of following oil. Natural gas is down a little bit. So, I mean, I know, Jermal, do you still have your natural gas position?
Still have it on, yeah. Yep.
So
one of them's
you're down a little bit lower, I think. Well, I have the same one on too, but I have lots of different natural gas positions on. So I always keep an eye on that. I might layer in a little bit more to that. And then my gold came off, my bullish gold position. And like I said, I do like to collect a lot of characters. And I was listening to Tim Knight yesterday. And while he is not bullish right now, he is long-term bullish metals. Okay. So
how did you get him to admit that? I haven't heard him say he's bullish about anything. I'm going to ask him about that today.
Shake him down today. You shake him down because he's coming on this show. No, I don't want to put words in his mouth.
He told her, he confided in her. So he's never said he's bullish about anything. Not even dogs, and he loves dogs.
He does love dogs. No, but not currently. He said he doesn't, the chart doesn't say it's going to pop right now, but he's long-term bullish metals. He thinks that metals are going to outperform stocks. Okay. Now, whether that means that stocks are going to come down or metals are going to go up, he doesn't know what combination. But because of that, I redabbled back into my gold position. My put spread rolled off. I always kind of have put spreads in there to just kind of continue to chip away and make money in gold.
He says that to you, and you hear that like, yes, it's time to get long metals. But what he's really saying is the end is nigh. I'm getting long metals. The market is going to crash. Things are over. We're all going to die is really what he's saying.
That's exactly what he said. And I just took the sunny side of it.
But yeah, I'm long silver. I have 100 shares with a covered call there. And then, gold futures, we were dabbling with some short put spreads there. Maybe I'll get back into that as well.
Yeah, the new level seems to be 4,200 now that it's going to dance around.
Yeah. But yeah, lots moving here. E-minis down 17, Nasdaq down 400. The Dow is the only one that is green right now. Interestingly enough, kudos to you with your call diagonal buys, sector rotation.
People have been asking in the chat if you've ever seen myself and Kramer in the same building at the same time. Not really, no.
Not yet.
Coincidence? I think not.
Well, Liz, thank you for your time. We'll see you a little bit later. Appreciate you.
All right. Happy trading, boys.
Yeah,
see you later.
Likewise. But yeah, E-minis are sliding a little bit, down 16. Nasdaq's down 380. We're going to take a quick 90-second break. Join us on the YouTube channel. We're streaming on Tasty Live. We'll see you on the other side of it.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket.
From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal. E-minis are down 17. Nasdaq's down 360. The Dow is the only of the big four that are up right now. Bitcoin, ETH flat. Kind of a choppy day here, but love to see Costco up to Jermal's happiness. Google up still 3.5 points. Microsoft up 6 points. Love to see it. Seeing a little sector rotation into the software products and kind of out of these chip stocks and into some of those consumer staples. But we do have a very special guest, Mr. Ben, on the line. And Ben, we got to ask you, are you buying a Dell because President Trump said to buy a Dell, or are you keeping your hands
Well, anytime President Trump says something, I feel like I need to respond. That's my best Trump impersonation. I mean, you look at Dell, you look at it on the daily chart, this thing is a bullish flag if I've ever seen one. I mean, it's going sideways. It's consolidating. It's one of those names that does feel like, pretty much any name Trump has been behind, whether it be Dell or Intel or you name it. It's just going to continue to push because he's going to win. He's going to win bigly. So I do like Dell. I do believe that if Dell can kind of break the top of that bullish flag and keep running, I think it could do just fine somewhere where above maybe 450 or so. I think it pushes to 5. But for right now, it's just really digesting that massive move it made between February and May. So at some point, it's got to digest a little bit. I think that's what's happening now. But eventually, I do think it gets back on that push higher.
I mean, within that same space, whether it's Dell, whether it's AMD, Intel, I mean, how are you trading any of these names? Some of the vol is starting to get a little high in some of these options-wise. I mean, what are you looking at doing? What's your go-to strategy in any of these?
Yeah, I mean, for me, I love to have a good risk reward. And so when I look at a name like a Dell, like an AMD, as long as it's in a bullish trend and I can play it at a pretty solid area of demand, previous demand, with a tight stop and a potential for a bounce. I mean, that's really what we've been seeing from a lot of these names, in this kind of, what's it called? The great CapEx trade of AI, whether it be, memory or whether it be processors. I mean, these have just been incredibly bullish names. And so I like to play bullish names in a bullish way with a good risk reward. So I'll look at a name, like Dell or AMD, and anytime this thing is pulled back, to any areas of previous demand, we have seen a pretty good opportunity for bounces. Just saw that on Apple on a previous pullback. And so, yeah, I look at AMD and I think, gosh, if this thing can pull back to that previous demand of about 500, where there's also, just a pretty important psychological level of 500, I could see AMD bouncing from there, pushing back up to the 5s. And as long as the VIX stays relatively low, I'm okay playing a directional, call on that. But if not, I don't mind, also playing spreads if the VIX wants to get a little bit higher. And options cost me a little bit more. So that's how I'm tending to play those names. As long as they pull back to some of these kind of key support zones, I like to play them for a bounce with a tight stop.
Beautiful. Yeah, we've been seeing some choppiness here in AMD specifically. I like that 500 call out, like you said. What do you make of the divergence between the Nasdaq? I mean, the Nasdaq, when you think about it holistically, it's all tech, right? But when you look at underneath the hood a little bit, you got the Mag 7 that just could not catch a bid. When we look at Mags, just the combo ETF here went from 70 down to 60. Now we're kind of chopping in the middle of the range. SMH at the same time is moving in the opposite direction. Do you have any sort of feel for, or do you play this kind of chips are selling off, software is catching a bid, Mag 7 selling off, other tech sectors catching a bid? Do you play that at all, or are you looking at single names individually. And trying to
100%.
find that.
Yeah. We very much look from the top down view, right? So I like to play strong names and strong sectors. And when we have sectors that are, not really outperforming, not really bullish, I mean, I look at some of the key sectors that have been strong for the past month, and that's XLF, XLV, XLI, the healthcares, the financials, the industrials. So you're right. When I see the Mag 7, compilation there, just kind of chopping along and not showing me a whole lot, then we don't really have the wind at our back. And that's what we typically look for when we look for kind of a top down from those strengthened sectors. Now, you mentioned, SMH with the semis, and at some point we had to see that cool off a little bit. I mean, last year I was looking at SOXL, which is a triple levered ETF on the semis, when that thing went down to $8 during the whole tariff scare. And then it recently hit 300. And so that is a enormous move for a triple levered ETF, especially in that sector. So I do love playing that rotation, but the way I tend to do it is I tend to find strong names in strong sectors, and the ones that have been really, showing out of late is the XLIs, the XLFs, the XLVs, which would make sense when you look at the indices themselves, because when you go to the Qs, we're in chop. When you go to the SPY, we're in chop. When you go to the DIA or the IWM, the Russell or the Dow, we're seeing a lot of strength. And so, XLF, XLV, XLI, these are the names that you would expect, with that type of index rotation, not just, sector rotation. So that's what I'm looking for. I'd love to play strong names and strong sectors.
Yeah, speaking of XLF and financials, I mean, we're literally, I've just realized, 7 days away. I mean, from earnings. Yeah, coming up. I mean, is there any you're looking to play? Do you play earnings at all? Is there any ways you like to play?
Yeah, we love to play earnings. Yeah, the way we play earnings is a very similar way for the way we try and play anything risk-wise. We just always, our job is risk management. And so if we can find a bullish name like a BAC, we played Citigroup, for example, on a run up into earnings. And so if we can play these names and get some risk capital at hand for a push up into earnings, as we know with a massive, catalytic event like earnings, it's going to push, the IV higher in the options. And so that's naturally going to help it anyway. So if we can play any kind of pullbacks like you see there in Citi, back to previous demand zones for bounces, that's what we like to play, get some risk capital at hand, and then kind of see if what we are seeing with the options market, is it just, are they buying them aggressively? Is it dramatically, leaning put call ratio toward calls versus puts? And then if we can put some risk capital behind that for earnings, then we try and do that, but always with kind of risk adjusted ideas that we got risk capital from on the way up to earnings. That's typically how we like to play earnings.
Yeah, some of these are boasting a pretty high implied volatility. Just getting a quick preview for some of these earnings announcements. Citigroup about 5% in terms of the implied move relative to the stock price. JP Morgan not as much, down at we'll call it 3% here. So there are some interesting island moves or island implied moves in Citigroup and some others. I would imagine if you look at Wells Fargo, it's probably going to be a little bit higher in implied volatility. Yeah, about 5%. So yeah, interesting to see JP Morgan not having the same amount of implied volatility as these other two. Bank of America likely in the same boat. Yeah, 3%, we'll call it. So yeah, there's going to be opportunities there, but I think the low, I always shy away from low implied volatility readings like 3% if I'm selling premium, like if I'm doing an iron condor or something like that. I'd rather have explosive implied volatility, but directional moves like this is super low. If you think Bank of America or Citigroup or Wells Fargo or JP Morgan could have a 5%, 6% move from earnings, you're basically doubling the implied move in those situations.
Yeah, and that's what we're looking for. And I completely agree with you. If I'm going to sell premium, I want the IV to be high. But as you see, when you see relatively low, financials has been strong. As I said, DIA has been strong. And so if we can kind of continue to see that strength, then I think that bodes well for, a post-earnings run. One of the things we also like to do is if we don't have a very clear sense of what that's going to be, we know that IV will drop, the minute that earnings is announced, and then can we play a continuation from there in whatever direction it goes?
Yeah, for sure. Well, thanks, Ben. Appreciate your time. It's been fun.
Hey, it's been my pleasure. Thanks for having me. And, really been a joy. So thanks, guys, for what you do. And look forward to being back sometime.
Cool.
Appreciate you, man.
Sounds good.
Thanks for coming on.
E-minis down 17, Nasdaq down 420. Dow is still the only one in the green right now. We'll see if that changes. But we're going to take a quick 90-second break here. You are watching Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates. Hello, Tasty Nation. Welcome back to the show. We've got the E-minis selling off here, down 22. Nasdaq down 470, over 1.5%. Crazy moves to the downside, but we're seeing some rotations back into some other products that have not been loved as of late. But we got Jermal in the house. We got E in the house. And E, I know you were pulling for the US of A.
Yeah, man.
It's bearish for the market.
Yeah,
clearly. It's absolutely bearish.
You know
for
what's
the market.
funny? I'm surprised nobody came out with a stat about like what happens after the day the U.S. loses.
That's all I could think about. And the game was over. Had to check out what Nasdaq was doing. We were just chugging lower. I was like, there we go. I guess that's the outcome. So I'm not gonna lie, it stings a little bit this morning. So I had to size down my position so that I don't do anything too crazy. So I'm putting up the guardrails. But no, with that being said, getting a little bit more volatility to the downside in the overall market. We did see an Iranian attack in the Strait of Hormuz, so that might be a little bit bullish for the oil market for now, which is nice because it seemed like the oil market was stalling a little bit there. I know we got the pretty big down move, but I think everybody was wondering if we were going to get some type of relief pop. So it's nice to see a little bit more volume coming into some of the oil names now.
What? I just paid $3.99 in gas today. I don't want to pay more than that.
Oh, did you?
You want to see more oil up?
At Costco?
Nah, actually, I didn't.
It's too cheap now. You just go wherever you
It was
want.
on my way. Yeah, yeah, exactly. I didn't have to worry about it.
Yeah. No, I hear you.
No, you're right. Oil's back above 70. It's been a minute. Honestly, it's been nothing but a slide in oil, and now we're starting to see a little bounce back. We'll see if that really means anything.
Yeah.
It's really something.
Yeah, we've got this straddle here, 76 straddle out 41 days, $850 in premium. So looking good as long as we stick around 70 or higher. At least in the long term, we'll be just fine. So
yeah. No, I hear you. A little bit more air into those names. I know the oil trade was a little bit of a difficult one. I guess if you were on the short side, that was one that really fell in your bread basket really nice because, I mean, we've been getting downticks almost on a daily basis. So today's the first uptick. I mean, we'll see if it's even going to be sustainable. You guys know how it is with some of these headlines, these quote-unquote fake headlines. So we'll see what sustains with the overall market. But we do have a long futures contract in there. So I think if we make new lows, I'll probably cut losses on that one. But I mean, it's doing pretty well for the day. We kind of caught it near the lows, and we'll try to ride this momentum a little bit on the day.
I mean, it looks like the beginning of a rounding pattern, honestly. Like It looks like it might have found a bottom there. So it's probably a pretty decent time to get long.
I mean, after such a large down move, and I mean, man, the velocity of that move to the downside was no joke. And I mean, we were chugging to the upside. I mean, putting in some record numbers on oil, and then I mean, we can just take the whole thing back within just 2 to 3 weeks, just like that. So it's a little bit reminiscent of some of the metals markets right now. I know it's a completely different market, but in terms of just how the emotions felt, the euphoria with the initial move to the upside, and then kind of a little bit more air coming out. So oil market's looking nice. Yeah, gold right there. We tried to catch a little bit of a bid, but I mean, I don't know if this downside action is even over in these metals. So that's something I'm being cautioned as well. You know, trading oil, we don't know if the bottom is truly in. We don't know if this is just another intermediary, just kind of a lower high on the way down that we're putting in. So we'll be cautious for it, especially if you're trading a little bit more directional. Like I know whenever you're selling the options, you have a little bit more flexibility. I know that's one reason why you like to do a lot of the options on the futures too. It still gives you that same flexibility to kind of manipulate the strikes, kind of manipulate the position a little bit there too. So that's definitely something to keep top of mind. But with such a directional position, I mean, you got to definitely watch out for catching some type of falling knife. So
for sure. Yeah, I think they set up here. I was looking at an out of the money diagonal, 10 points wide, and then an at the money, slightly in the money. And they're basically the same price. So I think I'm going to go with a call diagonal here and just buy the 380 September, sell the 390 August.
Okay.
Pay less than $10 for it. Very similar price if you moved this 10 points further out of the money, but I would rather need less of a directional move and have more than twice as much extrinsic value here in the short. In case we just chop around here or sell off, it'll be a better scenario for sure.
100%.
Yeah, both gold and well, I mean, I guess silver to some degree too, but just we can just keep it at gold and oil. And we saw, I think the research piece yesterday that Julie was talking about how those are some of the worst performers on the month. And I think a lot of people, you know, they look at stuff like that. What was bad on this month, and can you try and get an opposite move going in that direction? And I think that's what you're seeing a little bit with oil, with gold. They're having these rounding patterns. They're starting to have these areas where they fluctuate around. For oil, it's $70. For gold, I think it's about $4,200 at this point. So I also think those areas where you can be, like Mike has, short vol in that, whether you short vol and gold, however you want to do it, like they're going to mess around in those areas. Diagonal works as well, because when it does punch up above, you're able to like close it, because it will fall back down. It's still trying to figure out what area it is. It's not the same kind of gold that we saw last year, where it's just straight up bullish all day long, every day, doesn't matter. It's different now. It trades differently. You can see it.
No, 100%. You guys got any thoughts on SpaceX as we get into the rest of this week, or has that kind of been on the back burner since the IPO?
I think exactly that. It's been on the back burner. We have positions, but I day to day, I haven't even looked at the position that often, because it just seems like it's somewhere between 150 and 160.
Yeah, no, I got black tape over my position, so I haven't at a time. No, I mean, I had actually bought in a naked call on SpaceX. I think I bought it for about 620. The call went down to about worth $2, and then it went back up to 620. I was like cutting the loss at break even. I'm out of this one, and then I sold an out of money put spread there. So that one's riding a little bit. It's kind of break even, so we'll be patient for SpaceX. You just had to do it. It's SpaceX. So yeah, we'll be patient.
Yeah, we got a butterfly here, 10 days out, 20 points wide. It was just felt it was too cheap. $290 for 20 point wide.
Yeah,
and it's flat right now, but. Also have this long-term Super Bowl, sold a 125 put to buy a 300 call. That one's over a year out. So
that is a long one.
A long one.
Yeah.
Jamal gonna start growing some gray hairs by that time.
I already got some. Errol, it's too late.
I have one. And I don't know how I feel about that. That's what the oil market
worse than when you have multiple.
I got a couple,
Just throw it out.
Just pull it out.
I don't know. It was like I don't know. I left it in there. It was just like a mark of just like, I don't know. It was a milestone for sure.
If you leave it in there, it finds others.
That's the very first time when I saw my first beard hairs growing. I was like, I'm never touching this. And I had a full beard. I was like, I don't need a beard yet. But it was like one of those things where it's like, I can grow a beard.
Yeah,
gotta keep it. You know what I'm saying? It was one of those things. So I gotta keep the gray.
Yeah.
This is the an adventure into a man's brain or a boy's brain. One little hair.
You're gonna be one of those dudes that's fully gray by 30.
Don't get me started on the chest. I got 2 coming. You think I'm joking? We're gonna keep this PG.
On that note. Thank you, E. Appreciate your insight. But yeah, we're going to take a quick 90-second break. Join us on the YouTube channel. We're streaming live there. You're watching Tasty Live.
On April 14th, the SEC officially approved FINRA's proposal to eliminate the pattern day trader rule, also known as the PDT rule. This is a big deal for many retail traders. For more than 20 years, the PDT rule has been a major roadblock for smaller accounts that wanted to actively trade stocks or options intraday. In other words, we call it day trading. Here's how it used to work. If you made 4 or more day trades within a rolling 5 business day period, your account could be flagged with a pattern day trader designation. To keep that status, your margin account had to maintain at least $25,000. If your balance closed below that amount, your account could be restricted from trading and issued a PDT-related call. At Tasty Trade, they're called an equity maintenance call, or an EM call. The result? Retail traders with smaller accounts were effectively limited from actively participating in markets simply because they didn't have enough capital. Now, that's changing. Under the approved update to FINRA Rule 4210, the PDT designation is being removed, and that means you no longer have to limit the number of day trades you make in a 5 business day period, and you no longer have to maintain $25,000 minimum just to keep day trading in your margin account. In short, as long as your buying power stays positive, you can continue to day trade in your margin account. On our platform, we show real-time buying power, so you can always see where you stand and keep your risk in check. Now, it's important to talk about timing. While this news can be exciting, these rules will not take effect overnight. The new rules will become active 45 days after FINRA publishes its regulatory notice. After that, firms that need more time to update their system will have that additional time, up to 18 months, to fully phase in those changes. So be sure to check with your broker for their specific rollout timeline. And remember, day trading is extremely risky and not suitable for everyone. You must be knowledgeable and experienced to day trade. It's critical to manage your positions carefully and to fully understand the risk of potential loss. We'll continue to keep Tasty Trade account holders up to date as information becomes available. So stay tuned.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back. My name is Mike. I'm here with Jermal. You're watching Tasty Live. E-mini's down 30 points. Nasdaq down 480. We've got Tim Knight on the line. And Tim, we've got the microphones.
Yeah.
We can hear it all. We love your dogs.
Yeah.
They're literally yelling at you saying, bring me back to the beach.
They know when you're going on.
Yeah, well, no, they're a room away with a closed door between them, but still the piercing shrieks of a husky cut through. And so we're talking about hair this morning, huh?
Yes.
Is that the focus?
Yes.
And that's what I heard in the last segment.
Oh, yeah. Yeah. Oh, yeah, Errol. Yeah. Yeah.
Hair talk featuring Jermal.
He's talking, exactly. Featuring me. 'Cause I have zero at this point in time. I was talking about all his gray hairs. He's got one singular. He's like olive.
Yeah, I'm glad you didn't use that as a segue to come to me.
You look great, Tim. You look great.
Speaking of the aged and infirm, okay, I'm hearing noise, but my tasty obligations foreclose me from checking on what's being destroyed right now. So,
I actually just saw that recently, like this collage on Instagram of like dogs destroying things. I mean, that's the only thing I think. I haven't had a dog since I was a kid. As an adult, I haven't had any. But that's the only reason.
Let's see. Here's a Ross Chast cartoon book.
Oh yeah.
You can see this is with efforts to try, and this is the one thing in the house she got to. No, this is like one of thousands.
Yeah. I'm sure.
So, yeah. Anyway, besides all that, we've got some charts. We can bang through those a little bit.
Let's do it.
If that's okay. Listen, in the Tasty Trade Statuary Hall, I really want someone to consider putting mine in there, but just because this one thing. I remember distinctly on this very program, on this day here, this bar on June 22nd. I went way out on a limb and said, now's the time to short this one because it was the perfect kiss of that broken trend line. And it hasn't been a straight line down, but it's been a nice little tumble. This is SMH Semiconductors. That was the peak. And we fell and we pushed back to a beautiful gap close right there. Just picture perfect, right out of a textbook. And then another tumble. And the tough thing about mornings like this is like if there's any bears out there left besides myself, when do you cover? Because obviously at this immediate moment, it seems like a good place to cover because of what's transpired over the past few weeks. I trimmed my SMH options position some, but they expire in friggin' January, so I can't get too anxious about it. That's the challenge. It was a really good morning because I felt yesterday that I was already short tech and semiconductors, but I saw one very striking article that noted that 3 out of the 500 stocks in the S&P 500 accounted for 25% of the gains so far this year. And that's a lot of numbers, but I did the arithmetic, and if I've got this right, it means they have 167 times proportionate effect on there. That's pretty big. It was Micron, it was Western Digital, it was SanDisk. I was already short 2, and just because I'm a nasty little bugger, I'm like, okay, I'll short the third one too. So I short all 3. So anyway, there's just about no semiconductor memory stock that I'm not short. How many rooms do I have to get you away from, girly? Anyway, so it's better than before. So here's just a smattering of things I'm short now. And again, I'm struggling with do I cover, do I partly cover, et cetera. What I'll probably do is just tighten up those stops and maybe partly cover here and there. Marvell, MRVL. Here's another fine example of is the chart helpful? We're getting very close to closing that gap. at least it might be a good time to tighten up positions. You don't know how good your life is. SNDK. This was the one I mentioned yesterday that I hadn't been short already. I was already short Micron and Western Digital. And this sucker went up, and they did a video about this yesterday. It was up like 5,000%, something insane, since down here. You know, it was down like at 22 and it went to like thousands of dollars, for the love of God. And so now we're starting to shave some of that off. And so we've gone on this from, you know, approaching like 2,500 down to, well, it's like $1,000 so far, almost. Good heavens. 40% approaching is nuts. But it's congratulations to anybody crazy enough to like buy puts or something up here, because that was an amazing move. But I think there's a lot more to go. STM, which is ST Microelectronics, another nice tumble there. All these failed trend lines. I mean, it seems that tech definitely is like falling way out of favor, whereas the industrials just keep chomping forward. Although even the YM is red now, but YM was at lifetime highs earlier. We'll get to that in a minute. Seagate, STX, another nice tumble here. A lot of these are down 7, 8, 9% this morning. VSH, Vishay Interactive, this is down 9%. So just across the board, if you're short tech, and you know, we were joking during the break about, I'm going to go buy a Dell. That was part of what prompted it, kind of that man standing behind the podium talking about buy a Dell, and stocks are about to, I forget the exact words, but stocks are about to like go raging higher. It's like, really? From this depressed base, you think so? If this was 1982, sure, you betcha. You know, at the end of a 15-year bear market, absolutely. But no, I don't think we're poised to like go raging higher at these levels. And Caterpillar, of course, weirdly has become one of the great AI plays out there, even though they're kind of known more for their combines and their tractors and such. But because of the hyperscaler build out, they've become kind of the darling of AI, and even they're taking a hard turn. They were at lifetime highs just 5 trading days ago, and so I'm short them too, over 5% down. Micron, another terrific one. This one peaking up here. Just about the time I think their CEO was announcing a big multi-hundred million contribution to, I think, those new accounts for children, I guess to ingratiate himself. I'm not sure what the idea was, but that was kind of the tippity top of that. So we've cut through the trend line of that. Just anything touching hyperscaling, it's just got a stink on it right now. SMTC, the Simtech core, I don't even know what they do, but they got a nice little top there, falling on this one down almost 9%. And WDC, the other one I mentioned that was had produced such extraordinary gains, that's down almost 10%. The one item yesterday that I made mention of being bullish on was crude oil. And it's up 2.58%. Why was I bullish on crude oil? Well, charts, what else? My view here was that we had closed this gap beautifully. This gap had been created at the start of the war. So basically the gap between, the Friday and the Monday that the war was announced. We fully sealed it a couple of trading days ago and then some. And now we're starting to push higher. It would be completely plausible for this thing to kind of hack its way back up to the bottom of that right triangle. As far as the NQ, we have been range bound for weeks, but it is not out of the sight of realm of possibility that we could cut through the lows we saw, I guess this would be last week, and get out of this range, particularly as people start sweating bullets about the hyperscalers. As far as YM goes, as I said, lifetime highs earlier this morning. However, we're down just a little bitty bit right now. Got a little cute little shooting star there. It doesn't mean much, at 7:15 in the morning, but it's a start. But I have no position. In fact, I have no big ETF positions. It's just dozens of little stocks, mostly with tech. And last chart is IBIT. I reshorted crypto this morning by way of IBIT. And we'll see how that shakes out. It's been a little frustrating recently. We had a big bounce in crypto from about 58,000 to 64,000. We'll see if that gap seal finishes it up. So all in all, I almost said long story short, but that seems too pat. All in all, really good morning. And just the struggle here is like, when to take profits or just stick your thumbs in your pockets and wait. So I'm just going to have to go through them chart by chart. But really, really good start to the day so far.
Well, you're always the catalyst. I mean, by the time you end, we either turn around or we go further down. So
well, that's what worries me.
Happening.
That's what worries me. Well, we'll be up plus 70 on the ES at the day's end, because of how these things rock. So God is watching.
One last quick one too. We heard you were bullish of gold.
I'm long-term crazy bullish on gold. I've got a whole series of ratio charts, which, you can conclude that if nothing else, precious metals will greatly outperform stocks for years to come. Whether that means stocks fall or stocks go up less, mathematically it could go either way. But long-term. But no, my only precious position now is I'm actually short GDX, but that's a short-term trade. I think precious metals, if you're like, okay, you got to buy something and hold it for 5 years, precious metals definitely.
Love it. Well, thanks, Tim. Appreciate your time. We will let you get back to your pup over there.
I'm going to see what's been destroyed. What's next?
Perfect. E-mini's selling off still, down 45. Nasdaq down 600. Down the Russell, both red as well. But we got Julia on the line. We've got some research for you all. And Julia, what do you think of these markets?
The markets are marketing, that's for sure.
Markets are marketing.
That is
true. Markets are marketing.
And that's the segment, everyone.
Yeah, but are you marketing the markets?
Ooh.
Whoa.
Technically.
Blow my mind.
Technically, a little bit.
Yeah, technically, you're marketing the markets for sure.
Marketing the markets, yeah. No,
and by that, Mike
this,
has a dual appointment in marketing for those who don't know.
True.
Folks. The speed has been interesting to watch. We're still well within that standard deviation of the typical SPY moves, but the speed of it, I'm going to keep watching it. So we'll see what happens.
Mm-hmm.
This
is really a blip on the map, though. It's interesting, right? We're so used to being up. We see down 50. Oh my God.
Yeah.
Although in this market, though, if it flips green, I would not be surprised. I feel like it's been doing that habitually. This market gives me trust issues.
Yeah, it's been interesting because we had a little bit of a sell-off yesterday, and volatility wasn't really reacting. Now we're kind of seeing vol pick up a little bit. Still in pretty decent contango here, so I still would lean towards buying the dip here, but definitely a bigger move than I was expecting today.
It's crazy to think that this is the dip. I don't know, but little VIX spike. Now we're up to 16, which is kind of crazy. 5% increase gets you to 16. But yeah, that goes to show you that relative volatility metric, why we use those IVR, IVP, because it's relatively high, even though overall levels are low. So if you're an active trader looking for opportunities or looking for, times to sell premium, then that's why we use that relative metric. So that, and that's something we're seeing pretty inflated across all the indices right now. With Nasdaq actually being the highest, I think. Nasdaq being the highest by a lot.
IV rank, you're talking?
Mm-hmm.
Yeah, you're right.
Yeah, makes sense.
Usually the Russell's leading the charge on that one. That's pretty cool, but they're all over 30. So again, for active traders, for looking for, kind of short-term opportunities. That's why we use those relative measures, because, overall VIX levels are pretty low, but relative ones are high when we're looking at it within the context of the last year.
Yeah, that was your grandpa's Russell, not this Russell. This Russell is different.
My grandpa could probably handle the Russell better than I can right now, but I don't know. But you want to get into these slides?
Yeah, let's do it.
Speaking of revenge trades, God did this piece on revenge trading. Basically, when you get emotional and you take a loss and you're like, I'm just going to put more capital in to try to make my money back. What's going to happen? This is what this piece is basically looking at. So, God did this piece. If you want to follow him over on X, he's got Lytics. But super cool piece. It's about, staying consistent and trying to keep the emotions out of it. And especially not, trying to claw back your losses right after you take a big loss. That's kind of the moral of the story here, which maybe you guys can relate to a little bit, but we wanted to actually test it to see what the numbers say.
Cool.
Yeah. I hope Liz is watching this.
Yeah. She was saying that she has some emotions when trading, but still
some emotions. That's That's the hardest thing to control. Like the markets, you can't really, you can't control the markets. You can control your portfolio, but the emotions are the hardest thing to kind of keep in check. So here we're looking at 16 Delta SPY strangles, 45 DTE held to expiration again, because we want to look at these tail losses. What I think is important here is that volatility clustering is going to play a really big factor in compounding losses. And volatility clustering is something that you can see on different timescales. You can see that on 45 DTE timescales, 30 DTE timescales, 15 DTE timescales, sometimes intraday as well. So the principle here is really volatility clustering, and that's going to hold true, but we're just using 45 DTE kind of as a benchmark because that's where, the option, like some of the other risk factors of options are a little bit more negated, but just to make sure to understand why held to expiration. And then we're looking at 5 years of daily entries, 2021 to 2026. And then what we're going to do is we're only going to change the trade side after a loss. So if you incur a loss, we're basically going to scale up the amount of portfolio capital that gets allocated to these strategies. We're going to compare that to a fixed size. So say we're either going to put 5 or 10% of our portfolio net liquidity into this position versus doubling it up when we incur a loss. And 5 to 10% we're using because typically you don't want too much of your portfolio in one single position. But if you might have a smaller account, then that's why we're kind of using that 5 to 10% range. 5 could even be very big, if you have a very large account. But that's effectively what we're comparing to versus doubling up the amount of capital allocated right after you take a loss. We're also testing triple and keeping the double. So what we're basically trying to test is if you scale the capital up significantly right after a loss happened, does that make the losses worse, or does that make you gain kind of more overall? Does it drain the account or does it not? And I think important thing to note here is that when the VIX goes up, often buying powers tend to go down because that expected range increases so much. So not only do you double up the amount of net liquidity into a single position, not only are you doubling up the number of positions, you're actually going up more than that because we're using net liq as this benchmark. Does that kind of make sense?
Yeah.
Mm-hmm.
So any intuition here? What do you guys think?
I was going to ask Mike. I think.
It's not going to be good.
Right.
It's not going to be good.
No chance.
Speaking
Probably not good.
From my own experience.
Definitely personal experience, whether it's trading or whether it's betting.
Yeah.
It's not. And we have good old Kelly criterion here, speaking of betting. But yeah, it's not good. And other important thing to note is we do have mechanics around scaling capital up when vol goes up, just because premiums are going up and there's opportunity in that, but it's diversified across positions, not dumping everything into a single position. So important caveat here. I think you guys know where I'm going with this. We could go to the next slide.
It needs to be seen though.
Needs to be seen. Sometimes you gotta feel it too, which is not fun. But when we're looking at these 45 DTE positions and then managed to halfway to expiration, we can see that when we double up, our pops are still remaining roughly the same, right? We kind of don't expect pops to change very much when your position size, or you wouldn't change at all really when your position sizes changes. So kind of aligning with what you see from a strangle, but those big losses get a whole bunch bigger. And that's kind of what I talked about earlier, is that you have this volatility clustering in the VIX. It's when you have one instance of market volatility that's usually, followed by more market volatility. So there's a lot of, when you have this expansion in your broad market indices, there's a lot of opportunity that comes with that, but controlling position size is extremely important. It's more volatile, premiums get bigger, losses potentially get bigger as well. So when you're dumping more capital into the same position to try to claw back losses right after your first one happens, you're exposing a lot more capital to that market volatility instead of being more mindful of position size, which is what you should be doing especially after you have a big move that can incur a loss.
Yeah. And what you're also doing, and I think this is a great graphic, is if you're doubling down and increasing your position size and then you're taking additional losses, you're synthetically bringing yourself to that end of the curve with a very small move in the market. Where for you to have a one lot, if you're doing one lots, to have a $2,500, $2,700 loss, you need a massive move in the market because that's your size is correct in that sense. But if you're doubling, tripling, quadrupling your size, now the market only has to go down another 20 points and you're realizing that same effect as if you had a black swan event in the markets. So you're putting yourself in a scenario where you're gonna have a higher probability of realizing the loss equivalent to a black swan event if that makes sense.
Kinda does, yeah.
That's why sizing is so important, because like our MES position and MNQ positions we talk about, like we can absorb 30%, 40%, 50% downside in the markets. But if you're sized too big and you can only absorb 5%, well, you're halfway there today. So like that's the key. You have to be able to absorb all variance if you can do it. Like that's the correct size. If you can absorb all variance, especially to the downside, with undefined risk trades, then you're going to be in a much better spot.
And yeah, that's what we're really looking at here. We're trying to look at, like, we're looking at undefined risk because we really want to understand that tail in these kind of extreme events. They don't happen a lot, but when they do happen, they can get very bad. And exposing more and more capital to that, not strategically. You want to potentially scale your capital up when you do have this market volatility, but you want to be mindful about diversifying the capital, about being especially mindful about single position sizes in a specific underlying, especially as the market goes down and more assets kind of become correlated to the market during those like high volatility events.
Mm-hmm.
So scaling the capital up and capitalizing on those higher premiums can be, good thing, potentially, depending on risk tolerances. But being super mindful about how that capital is allocated and not putting too much into a position, especially when you're trying to really claw back losses, that can get really dangerous. So if we go to the next slide, here we're comparing a fixed 10% versus fixed 5% versus doubling down. And again, we're using 5 to 10% here because we wanted to account for different account sizes. So 5% might even be kind of big if you have a very big account. 10% might be, it's a little higher than I would say like the mechanics or the rules of thumb. But if you have a very small account, that's kind of why we're trying to account for those different levels. And obviously the 10% is the most aggressive growth overall, although the most volatile. And then when you're doubling down, that's when you actually entirely wipe out the account, just because even though your pops remain the same, those losses compounding specifically, while they don't happen very often, are enough to really drag down performance overall, such that you actually break even after the look back period.
Love it. Yeah.
Yeah. This is another interesting one. So we're basically looking at what's the probability of doubling a loss. And what was really interesting here is that probability goes up to 90% when you're putting more capital into a trade, right? Because like with more capital at risk, and these autocorrelated events, this volatility clustering that tends to happen, you actually see that you have a 90% chance of doubling your initial loss when you're doubling down on a trade, versus 28% overall. So that I thought was a very interesting one. Again, like these are not very common events, but when they do happen and that tail is something that people are experiencing more, that can be detrimental to kind of long-term growth. So that was a very interesting result.
Losses bunched together, just like volatility.
Just like volatility, bunching it together. And then again, the deeper the revenge, the worse that it gets. And I think that this is just, kind of moral of the story is that like trying to claw back losses and getting emotional and scaling capital up to try to recover is not necessarily strategic. There are strategic ways to do that, but putting more and more capital into the same position to try to, get a different result can be very dangerous. So I think that's like the most important thing is about staying consistent, about staying strategic, about allocating capital, and especially about scaling it up, being very thoughtful about doing that.
Yeah, I think it's, again, it goes back to the doubling at the wrong time, but also just doubling increases your probability of reaching what would have been your black swan event if you just had one contract size or one tranche of whatever you're trying to trade.
Yeah. I think that's another important lesson about short premium positions is that your pops are high, right? You can get like 60, 70, 80% pops, right? Like, so it's really just consistency is kind of like one of the most important things in my own opinion. It's really controlling those tail losses and trying to stay in the game as long as possible to capitalize on those small, profits over time. Pops are in your favor, right? And it's really about controlling position size and being consistent is like, it's hard to do, especially right after you take a loss.
Yeah, it is.
For sure.
Cool. Okay, we can go on over to the takeaways. So revenge sizing turns some losses into even bigger losers, doubling really like what we saw, at least in this specific example with the specific underlying over the specific time frame, just completely wiped out a portfolio. And the deeper the revenge is and the more capital you try to dump back in to get some of that money back, the worse those cumulative losses tend to become, specifically when we're looking at those kind of extreme market events. They don't happen very often, but when they do happen, they can escalate pretty quickly. So the moral of the story here is to really just be mindful about scaling up capital and recovering losses in a strategic way. If the statistics are favorable, if volatility is favorable for a specific strategy, then allocating that money appropriately versus getting emotional and trying to claw back with the same position, basically the losses that you incurred.
Size for your edge, not your emotions. That's key.
Size for your probabilities.
Lovely.
Love it.
I like it. Beautiful. Well, thank you, Julia. Appreciate your time. But yeah, always keep that size in check. And really, it can be boring sometimes when feel like your size is too small, but that's actually where you want to be.
Yep.
Because that's when you know, like, it doesn't matter what the market's doing right now. Like, my most confident position is the MES position, MNQ position, because it's just, I can withstand anything and I know what to do at certain times. And that's where you feel good about the portfolio that you're managing. For sure.
Yeah. That can also be tricky. If volatility is low and your premiums are low and you're like, hey, I want to scale up a little bit. I don't know, collect a little bit more. It's when volatility is low, overall probability of a vol pop is low, just overall. But the ones that statistically have the worst outcomes for short premium traders are when vol is low. So that's precisely the time you also want to be mindful about not over allocating overall capital into short premium. And then when vol goes up, those rare events, capitalizing on those events appropriately, and just size is just so critical no matter where the VIX is at.
Yeah, 100%. Well, thank you, Julia.
That's all I got.
We'll see you.
Thanks, guys.
We'll see you later. But yeah, E-mini's selling off here. Speaking of sizing correctly, E-mini's selling off 45 points, down 0.5%. Nasdaq down 2%. Down the Russell, both red as well. Bitcoin and ETH selling off right now too. Crude oil trying to catch a bid here, up 2 points now, 2.5%. You've got some other single name products catching a bid. Costco's up 9, Google's up 4, Microsoft's up 7. Those are interesting considering the Nasdaq is so red. But the Nasdaq being red is really related to a lot of these semis. SMH down 5.5%. You've got SanDisk down 200 points. You've got Micron down 80 points. You've got Intel down 12 points, much to my chagrin. But yeah, lots of movement in these markets. We got TP on the line. TP, what are you thinking about today? What do you have your eyes on?
Good to see you guys again. Okay, so we have to bet on America. Why? Because our overall market cap is, I saw a graphic a little while ago, can't remember the specific numbers, but it's about 8 times bigger than the next biggest one, which I think is China or Japan, something like that. The United States market is the place to be. Everybody else is, I wouldn't even count them as runners up. Our Mag 7, the market cap of our Mag 7 is bigger than I think every other country still, and certainly bigger than most. So yeah, this is the place to be. This is where the game is played in the American markets. And right now, what I'm seeing, we get this is, Mike, you were saying what the S&Ps were off a little bit this morning. I'm not sure if that's going to follow through. What I'm looking at in my little heat map here is an awful lot of green, guys, an awful lot of green. Google up, Amazon up, Johnson & Johnson, Walmart, Coca-Cola, Procter & Gamble, JP Morgan, all these stocks are up. Microsoft up after they axed a bunch of people from their Xbox division. Or was that Meta? I can't remember.
No, you're right.
Yeah, they're rallying that. Palantir is up. The stocks that are down, chip stocks, NVIDIA, Avgo, Micron, AMD, that sort of stuff. So yeah, the big cap stocks, particularly Nvidia, Micron, are down. That's what's pulling the S&Ps down right now. But I see, as opposed to yesterday, there's a lot of green on the map. Over 500 stocks. In other words, across the 500 stocks, there's a lot of green. Some of the stocks I'm looking at, and I don't know what you guys think about this, but GEV, which is GE Verona, what is it called, guys?
I think Vernova,
Verona, whatever it is. And they're kind of like, I guess, Jermal, I don't know if you're up to speed on what it does. I'm barely up to speed. I think it's where they do their experimental electric stuff or whatever it is. That's down 2 standard deviations this morning, down about 9%. I've traded GEV in the past. Mike, what do the options look like in there?
I mean, they can be wide.
Expensive.
Yeah, well, it's a $1,000 product with 73% volatility. So the options are rich. There's not a huge amount of open interest in there. I would say let's go out maybe to, go out to 38 days maybe, Mike, and see what we look like. Yeah, there's no open interest in there. But just, go in the... just see.
I think it's moving this way as a result of Samsung. It's a sympathy move.
Yeah, and I see this is it. That's a sneeze, guys. I understand that I love Korea. Don't get me wrong. Kospi is great, but please, what happens? There are 2 stocks that drive the Korean market: Samsung and one I forget. HiSys or whatever it's called.
Hynix. Yeah.
Thank you. See, Jermal, thank you. Thank you for.
I know we need to hang every day in life. You know what I mean? We complete each other's sentences. I'm with you, TP.
Exactly. So let's see what we get for a 10-point spread in there, Mike. So I collect $3.40 in there. Again, my metric, very simple metric. If I can collect a third of the width of the strikes on a short spread, if I'm bullish, sell a put spread, bearish, sell a call spread, that sort of thing, I'm collecting a third of the width on here. That's what you get for a high volatility, high priced stock. And if you want to take more risk, again, GEV, I don't love the liquidity in here. Don't love it. But if you're looking for a bullish bet on anything that's down a lot today with really high volatility, GEV is a possibility. Another one I'm looking at, John Deere and Caterpillar are down a lot today. Deere's down 1.84 standard deviations. Cat's down 1.74. Again, Jermal, that might be why, because crude oil's up and Korea's down. I don't know. Take your pick. The grains have had a nice little rally over the past week. Corn, beans, wheat are all up. So tell me why that's bad for stocks like John Deere. I don't know. But I closed out my long soybean and corn positions before this rally. They hit my profit targets, so I took them off. So I turned it was okay. What could have been a bigger winner was just a good winner. I'll take those profits. I don't care. I'm not beating myself up over that because I had no idea. Nobody does how high these things are going to rally. But looking at Deere or Cat, again, I don't trade those a lot. Let's take a look at the skew in something like Cat. Again, a $916 stock. So if it's 916, that's basically in between 910 and 920. So go down. Let's make the math easy, Mike, and just go 910 down to 890. The 890 puts are trading at the ask price is 51. Let's go up 20 points from 920 to 940. The ask price on those calls was 54. So 54 versus 52. I don't know, Jermal. The call skew looks pointed to the upside. So yeah, if the market is bullish on this, selling a put spread in Caterpillar, How much credit do we get on those things? And with 50% IV overall, again, that's a fairly high volatility. So 10 points, $4.
I mean, it's funny, as Tim Knight said, it has become a volatility play. I mean, like I just mentioned, I couldn't stop talking about yesterday, these data centers. Just drove by this data center in Wisconsin, and it was massive, and all I saw was trucks, to his point. It's true.
So there you go. So, and Jermal, that's an interesting point, because when I think of Caterpillar, okay, it's, the grains, because deer's down. But those companies, especially Caterpillar, are as much about manufacturing and heavy equipment as they are farm equipment. So you're absolutely right. So the point is that if you're bullish on this thing, I would absolutely use defined risk trades. First of all, naked options on a $900 stock are going to be very capital intensive. And the return on capital, one of the things I look at, guys, for a trade like this is if I'm putting up my buying power effect is $713, my theta on this, where's my theta on there, Mike? Do I have it on there? No, we don't have the theta on the screen, but that's something. I look at how much theta I'm generating for that buying power effect. Yeah. Typically, $1.50, perfect. So $1.50 per day versus $700 of buying power effect, little low, but again, it's still positive, and that's how. I'm not saying you're guaranteed to get this at all, and you guys know that. And you got to know that you guys talk about this all the time. There's no guarantees in trading at all. But the bottom line is trading short spreads in high volatility products gets you a better return on capital if you're willing to take the risk than sticking your money in a CD. And, okay, maybe you don't have to do this with all your money. Maybe, you don't have to be trading all the time, although it certainly helps you find opportunities. But this is the sort of strategy that I like, whether it's in Caterpillar or Deere or GEV or whatever. Mm-hmm. And you can be bullish, bearish, or otherwise. But the point is getting a return on capital from theta that is personally my go-to number. Some of the other stocks, GE is also down 1.43. So GE, Vernova, and GE. GE is used to be a less expensive stock, now 364. Yeah, right. So what we're seeing on the upside, guys, the big movers on the upside, GILD, gold, the Gilead is up 2.1 standard deviations. Pepsi, a lot of the consumer non-durables, things like Pepsi, Coca-Cola, what are they, Johnson & Johnson, they're all up a lot today. Mm-hmm. So, Pepsi up 2 standard deviations, 2.0 standard deviations. Coca-Cola up a lot too. Bullish, bearish, I don't know what your guys' take on. I don't want to start a fight between the two of you.
I'm bullish. I've been talking about it all morning, actually. Yesterday was dawning on me that this rotation has been happening. Yesterday, all those semis were green, and all those names that you mentioned were red. And it just seemed kind of like a play to make. And so I made it in a couple. I did it in Colgate, Palmolive, and Target, and Procter & Gamble. Yep. I did diagonals in pretty much all of them, like 4 names.
Nice.
So, yeah,
nice.
That was a play.
Well, see, that's exactly right. In Jermal, to your point, you just saw an opportunity. And the only reason you're going to see this opportunity is you were watching what was going on in the market. And, okay, we do this for a living. I understand that. And maybe everybody doesn't have the time to focus on it like we do, but it can pay if you have a little bit of time to invest. Again, the mobile app is huge. Look at this stuff on your mobile app. If you're in some boring meeting, sure, put a trade on in Procter & Gamble. What's not to love? But anyway, I go back to this, guys. There's a lot of green on the board. The Amazon's up. Johnson, to your point, Jermal, it's a lot of those consumer non-durables. What are the S&Ps now, Mike?
Down 57.
Yeah, so it's a nice little sell-off. I'm short some put spreads in the SPX in there. I've got a little bit of a loss, but I'm going to hang on to those. I still have faith in the strategy. And it's the sort of thing you got to do every day. So T-Mobile, TMUS, is that T-Mobile?
No short puts
The
in there.
telecoms. Yeah, exactly. The telecoms are recovering from that space. I guess it was the SpaceX sell-off. The SpaceX scare.
Yeah.
I don't know, Jermal. You remember the Red Scare of the Well, you don't remember the 50s. I don't remember.
No, I don't. I just turned 50. I don't remember the 50s.
Exactly. You remember, but you remember the 40s. So the point is, yuck. So, but the point is the rescue. Now we have the SpaceX scare. So whatever, anytime that anytime that Elon Musk steps in, into an arena, everybody gets scared. Okay, fine. But right now, the big ones, T-Mobile, Verizon, AT&T are all up. Those were, again, contrarian bullish opportunities a couple of weeks ago.
You bring up a good point, and I never really thought about this, but it's probably not a surprise that the arenas he jumped in has government contracts, right? Like GM and Ford always had government contracts. Same thing here with this space situation.
He watched the movie War Dogs, and he was like, what am I doing?
So where's he going to next, TP? You're strategist.
Right.
Where's he going to next? What else has government contracts?
Right. I don't know. It's whoever's spending a lot of money. Well, actually, it's going back to this point. Who has more money in the world? What's the biggest government in the world? Probably the United States. Mm-hmm. I haven't looked at our tax revenue, versus other countries, but we have by far the biggest economy, biggest market. We probably have the most tax money to spend. So, Jermal, it's interesting that, that's, again, I'm not belittling what Elon Musk has done. If I were smart, I'd go after government money too, but I'm not. And so it's good for him, but that's the way a lot of these places do. Palantir.
Yeah.
Palantir's all government money. Look at Microsoft. Look at what's his name? Who's the weirdo that ran Microsoft? I can't remember his name.
Bill Gates.
Bill Gates.
Right?
Bill Gates was all about
that weirdo moniker has been substantiated in the last couple of years, by the way.
Exactly. So whatever. So the point is, he comes up with DOS. He comes up with DOS in 1980, and he gets in with IBM.
Yeah,
and IBM is the huge. You never get fired for buying IBM, so it has huge government contracts, and by extension, that's what brought Microsoft out of just the garage and into the Fortune 500. Mm-hmm. It's tapping into those big sources of money. That's what it is.
So I guess we just got to figure out that's the next trade. Where's the next government contracts, and what's going to be the next company that's a disruptor in the field? Because that's all he's done is create disruptors.
Yeah, and you don't know, right? You don't know, and so and if you want to spend time doing that, and I mean that in a rhetorical sense, if somebody out there wants to fiddle around with stuff, just like wanting to look at charts or financial statements or whatever, fine, go do that. And once you come up with an answer, please use a smart, high probability strategy to express it, because I think it's more profitable for me personally to look a little bit about what's going on in these companies. I don't spend a lot of time looking at specific companies or what's going on with them. Yeah. I look at their volatility, I look at their bid-ask spreads and the skew, and that's my trade.
Nice.
Love it. Yeah, check out War Dogs if you haven't seen it. It's a great movie about basically about government contracts and these kids that get involved with selling military items to
those dudes. Yeah, with Jonah Hill and Miles Teller. That's right. I do remember that movie. I heard it was good.
It's really good.
Is Jonah Hill that kind of pudgy guy?
Yes.
Yeah.
Yeah, I think I've seen. I don't think I've seen the whole show, Mike, but I've seen snippets of it. And and again, I'm not up to speed like you guys. I'm not cool. Okay, I don't get invited to Taylor Swift wedding like
Weddings
you
and
did. Yeah, so it's, and I don't know the big names, but anyway, I know the budgie kid that's on these clips. That's how I know it. So I've seen snippets of that, and it looks pretty funny. I agree.
Yeah, you should check it out. It's a great movie. Great movie. Well, TP, appreciate you. Yeah,
Great to see you,
we're gonna
TP.
take a look at some of these names. There's a lot of things moving under the hood in the S&Ps and the Nasdaq. But yeah, E-minis down 50, Nasdaq down 600 now, 2.25%. We're seeing some red across the board from the big names. But yeah, we are going to keep on keeping on. See what these markets have for us. TP's so silly, such a silly guy.
Oh man, I got tears of that.
But yeah. What do we think in the rest of the day here with 10 minutes left?
I am thinking about right now. I'm looking at July 8 SPX options. I'm looking at putting on a Super Bowl. I'm just waiting because I want to see if we're going to keep going down lower or not. But you know what? Why don't we talk about it on the other side of a break?
Yeah, let's take a quick 90-second break. Join us on the YouTube chat. We'll take a look at the YouTube chat. Give us some trade ideas, questions. We'll field them over the next 10 minutes. Do a little rapid fire section. We'll be back in 90 seconds. You're watching Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jermal, and we've got a few minutes left here before we kick it over to Liz and Chris at the top of the hour. But E-minis down 50, trying to catch a little bit here. Nasdaq down 600, but still big names carrying the moves to the downside. I got filled on a gold call diagonal spread here. Long September 380, short the 390 in August for 875. So no upside risk there. Just looking for a continuation there. And then SPX, I need a big rally from here. Got filled when we were 20, 30 points higher at the 75.20, 75.10 short put spread to finance the 75.50, 75.60 long call spread. So the Super Bowl here, taking it on the chin though with the market down this much, but still just need a cool 30 points and we'll be back in the green there, but not looking too hot right now, Jermal.
Yeah, I'm looking to as we're down here. I'm looking to see what the market does. I might put one on for tomorrow. Yeah. We'll see, but I'm not going to do it right here. I'm kind of waiting. Plus, it's not lining up right. But in the chat here, looking at some things. Of course, our guy Brandon he says, "Shout out to Jonah Hill." I know, shout out to Jonah Hill. Funny, you guys had to be there. But let's see questions. I know somebody's just saying, look at Oracle, GLW, Marvell, Meta. I don't think they're asking for anything. Yeah, no, those are all down. Now that I realize it, all the names you mentioned. Not Meta's up, and that's actually kind of surprising that Meta's up. I'm not sure what the deal is.
Oracle's at annual lows. I kind of like that.
Oracle's at annual lows.
Let's take a stab in that.
I still have a Super Bowl in there. I think I moved it further out. a minute.
Yeah, I like this. I like this setup a lot.
Surprising that it's down today, though. I mean, this is a software name. This has been one that moves with the software. Software is mostly up today, but that one's down.
Yeah, 20-point wide diagonal spread for $10. It's a good risk reward if you get a reversal here, and we're at annual lows. So this kind of feels like one of those situations where maybe you catch a little bounce, but you really don't need much for that kind of setup, especially paying so little. 20-point wide diagonal spread for $10. I was just filled on that.
Nice. Somebody, yeah, you know what's having a big day is SIBO. SIBO's having a big day. Have been taking it on the chin a lot recently. SIBO and CME, out of fears of perpetuals.
Yeah,
this was making a move.
This was a big sell-off here. Lots of downside movement. We played that. We caught the bid right here, I believe. But yeah, seeing a nice bounce from the lows. Same thing with CME. So
we'll see if it continues.
These products are very similar in the sense that yes, they'll take some heat from here and there, but they're just so big and have a ton of cash. So
what does it mean when a 30 delta trade gives a higher pop than 70%, like has 80% or higher? That's what's happening with this SPX 0 day I want to do.
What is the 0 day?
Doesn't say the trade, but who knows? Maybe selling a put spread or something. And again, I mean, if it's giving you that high of a pop, first of all, it's because it's well, in this case, it would be something that was pretty far out of the money on a day like this where we're having, this move, but it's technically really far out of the money. It doesn't, again, it's just pricing in what the current inputs of the market are giving you. It's not saying that it's not going to necessarily, in this case, it doesn't mean it's not necessarily going to go down that way, but right now, those are the numbers.
It could be basically if you're looking at a short put spread here, 74.60, 74.50 or whatever. We're already down 50 points. The implied move for the rest of the day is 20 points. So if you position yourself into a sell-off like today, which I wish I would have checked the SPX expected move for the 0 day, but it was probably around this number, 30, 40 points. So let's say we're at the bottom of the range. If you go down further, it's a decent pot odds scenario. That's why I think if you're doing these 0 days, especially if you're waiting till like 9 a.m. or 10 a.m. to place it, just having a good understanding of the implied move for the rest of the day, whether it's today or even tomorrow, once you reach that level, if you're bullish and you're at the bottom of the implied range, like I think that's a good entry point, especially if you run that 1,000 times. Like you're going to have a slightly better result than if you're just entering it on the open regardless of the market move, because you're entering it in at a favorable position. And especially with these markets, we've seen bids get bought and the markets catch a bid and we find the floor. So we'll see. But I did the opposite. I went pre-market thinking we would rip into the open, and we did the opposite. So you win some, you lose some, but still plenty of time remaining in the rest of the trading session. We could see this reverse in a couple of minutes. We've seen it before. So
that's part of the reason why I'm waiting to see if we go down further and then eventually bounce back. Like I'm just trying to line up my strikes appropriately, or if we just continue sliding. I don't know how. I don't know yet. It seems like I don't know. I don't see anything that's convincing me to fully get into this trade. At the end, I could also wait till the end of the day and put it on too. So I'm not in a rush to put on I'm speaking of an SPX Super Bull trade for tomorrow. I'm not in a rush yet. Yeah, I'm looking at 75.25 right now. I mean, where we are here, that's the interesting part. But I don't know. What if we fall lower? Then
it wouldn't be good.
Yeah, then it's not the same trade for even tomorrow.
Yeah, and
Again,
sometimes
void of news. It's not like there's a catalyst tomorrow or anything.
Yeah, sometimes it feels when you have these markets that are kind of like flat, and then you have some big names that are selling off big, and then you continue to sell into the morning session. I think to your point, if you're placing this right now for the end of the day or the end of the day tomorrow,
I was wrong. We do have a catalyst tomorrow. It's FOMC minutes.
There you go. Well, I think either way, it could be a chop until that happens. But I think if you wait until the end of the day, you're going to be in a much better situation, especially if we sell off from here. Like if this just continues and we're down 60, 70 by the end of the day, which is very possible given what we're seeing right now.
You know what? Seeing that catalyst almost makes me want to get a super bear now. It's actually because that dude didn't say anything positive at that last FOMC meeting.
Yeah. I am kicking myself though, because we had Kevin on yesterday and I was saying I was going to get into an NDX butterfly to hedge the position, and I did not.
Yeah.
So that sucks. What was I looking at? 29,000. I think I was looking at 29, 28.7 and 28.4. I think I was looking at a 300 point wide and it was trading for like $1,300.
Mm-hmm.
Yeah. Oops. That would have been $1,000 gain.
Yeah, it would have been. Yeah.
But yeah, these are still cheap relative to max profit. So that's a good example of like, if you catch a move like this, you can make $1,000 on a $1,000 debit. But yeah, I think still, if you believe the market's going to continue lower, they're still relatively cheap, all things considered. Ivy Rink at 13, Ivy at 24%. You just need to size it correctly for your risk tolerance. I like to keep them between $500 and $1,000 if I'm doing it.
Mm-hmm.
But yeah, kind of tough to see this market sell off here.
I may have changed my disposition. I may have. I might sell the 7,500, 75.10 call spread to buy the 74.75, 74.60 put spread for tomorrow. If we get a bounce back, if I can get it for $1 credit, I'm putting it on. I'm not even thinking about it.
Yeah.
Right now, it's jumping around a lot. So
40-point implied move for tomorrow. So still some fireworks, but we're exceeding that right now. Down 50 now in the E-minis, down 650 in the Nasdaq. Jermal, it's been a very fun morning.
Yep.
As always, we've got a couple of trades on the follow page. We'll play some more throughout the day as the market speaks to us.
Oh, yeah.
But yeah, keep on keeping on the Tasty Live YouTube channel. Throw in your trade ideas, questions in the right side chat. We got Liz and Chris coming up next on the other side of this break. You're watching Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day is
close.
starting out great. Want to go double?
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. You're watching Tasty Live. She's Elizabeth. I'm Christopher. That doesn't sound right at all.
Elizabeth and Christopher. I like it.
Nope. Laura, can we start over?
Try again.
How are you today, guys?
Good. I'm glad to see that you are not charred to a crisp. I was laughing as I was walking my dog, telling my husband about your plans with your yard and how you're using kerosene. And he's like, is he qualified to do this? And I said, yes. I don't think so. He's a macroeconomist.
Men and women have been using fire for thousands of years. I think we have it in our blood memory, as it were.
Well, he finds it amusing because we had the exact same problem in our yard and paid lots of money to get rid of it, which is ridiculous. But they didn't. They just dug it up. They never exploded it, Chris.
Yeah, digging it up is probably the safer way. But I also, like, there's an entertainment factor here. So I've let my insurance company know, and they're like, okay, as long as you're doing it like the proper way, this is a way to do it. So
you called your insurance company?
Yeah, I like to let them, now that my previous insurance company fired us for taking too much of their money to repair things, the new one I've been trying to be open with about our problems. It's like, hey, yeah, trees falling, letting you know I'm taking it down just in case.
Oh, very good. Very good. I guess in insurance, forgiveness is not easier than permission. But in all other industries, forgiveness is easier than permission.
In most cases. Speaking of forgiveness, I think that the semiconductors owe the rest of the market an apology today. Given what they're doing. But, it's so interesting. This is all on the back of really very good news. Samsung is making so much money. They're like, yeah, demand is actually more sustainable than we thought. So we're going to increase supply moving forward.
So now, in your macroeconomic view, like you get that report. Are you surprised at what Samsung did?
I mean, I think it does speak to the positioning in this environment. And we've seen it recently with a lot of these names where you're getting, we're going from there's not enough AI, not enough compute out there to maybe we have a little bit more supply coming down the pipeline over the next 12 to 18 months than we thought, which is, again, a good thing long-term for the build-out. We don't want, we've seen it in the trade balance today. We've seen it in the CPI data. The bottlenecks in memory are leading to higher inflation, to AI inflation. That didn't roll off the tongue as I thought as well as it would, but it works on paper.
Okay, so I know they're trying to get us to go to confirm and send, but talk to me more because you know more about this than anybody else on the network. The SK, no, Laura, you're okay. That SK Friday is the day where they are IPOing, correct? I'm gonna say it wrong. SK
Hynix.
Hynix, yeah.
Yeah, so they are IPOing on Friday. I think the listing is going to be about $29 billion, so obviously a much smaller float to absorb than what happened with SpaceX. But
not nothing. Not nothing.
Not nothing.
Yeah.
And I think that is something to consider. And you're seeing a rotation away from maybe some of these other memory names in the run up to an IPO. At the end of the day, the only way to get exposure to SK Hynix for most US investors, you had to go through DRAM or EEM. EEM basically was a 40% plus Samsung and SK Hynix ETF at one point earlier this year.
I did not know that, and I was in EEM, so thank you very much for clarifying that.
Yeah, everyone's pointing out like, oh, look at emerging markets; they're doing so well after the Iran war. Well, look what's look what's inside that trunk. It's all semiconductors. So
yeah,
that's why they're doing so well. Yeah.
Will that have a rotation factor into and out of maybe not EEMs? I thought it would affect Micron a little bit more. Would it affect Micron at all?
Yeah, maybe that is having a play with Micron here. But I like to call it SanDisk here for what it's worth. I was just looking at the chart because they're down another 11.5% here today. Western Digital is their parent company. They spun them off last February. We learned coming into the market open on June 23rd that Western Digital had unloaded their remaining million plus shares in a private market sale. They swapped with an institutional investor their SanDisk shares for Western Digital shares. They're like, hey, we want to reduce our float. You take our SanDisk, we'll get your Western Digital back. They'd use it for like an equation using the volume weighted average price of the two stocks during a trading window. And then the trade was executed. That is
pretty interesting. What is WDC doing right now?
WDC is down as well. It is off 9.25% here. But I find it so fascinating. That literally marked the top in the market. That transaction was completed on June 23rd. So the Friday, June 22nd close. We've been a straight line down since that little particular corporate event.
It is pretty interesting how it did mark the top, right? I'll give you my SanDisk for your Western Digital, and it's been going down ever since.
Ever since. Hey, we do have confirm and send here, and I know that that's what the people want to hear from us. That's why we're here at the end of the day, to help answer their questions, Liz. Can we get into it, Laura? Shall we?
Let's do it. I can't believe it's July 7th already. The summer's over, Chris.
Feels like it. Like I turn 37 next week. It's like didn't I
You
just
do. When's
turn
your
36?
birthday? What's your birthday?
Saturday. Next Saturday.
Okay. Could you at least you celebrate on a weekend?
Can't avoid it. One more year.
No, SpaceX. Now back to business, Christopher. SpaceX joins the Nasdaq 100 today with $1 billion in forced index buying into a float that's only 3 to 5% of shares. When a stock has that kind of supply-demand imbalance with no real IV history, is there any way to price its options fairly, or is it untradeable until the noise settles?
It's a good question. It's not untradeable, right? But I wouldn't say it's a blind premium selling product just yet, like we've seen with, like a Tesla, for example. And that actually is one of the particularities of how the market's evolved over the past week or two. Trading volumes in Tesla have risen back above where they were in SpaceX. And so it does seem like shorter term traders are moving over into the volatility product that they're more comfortable with, and there's a bigger track record there. So I wouldn't say it's untradeable, as maybe you have a different perspective here.
I don't think it's untradeable at all. I think that when you're looking at this, I just pulled up SpaceX, 34 million shares have traded. And when you look at those, it's a $150 product, and you're looking at 10 cent, 20 cent wide markets. So there's lots of open interest in there. So I don't think that you have to worry about options being unfairly priced unless you see something that's $5 wide or $2 wide. You're looking at decently tight markets for a brand new product with 34 million shares traded. So I think the options are fairly priced. But I like what you brought up where you said it's not just a blind premium selling, because that hasn't been established yet, right? But I don't think the options aren't fairly priced. I think that they are. I think that you can jump in. And as a matter of fact, I have been. I'm getting hurt today, but I've been doing 2-day selling puts. So I've been aggressively selling puts. Right now, I think I have the 165, so they're in the money, and I'll have to move them in 3 days out in time. But you're getting a lot of premium for taking that risk.
Yeah, and right now there is a lot of call skew in the market. I'm just looking at $5 wide we're basically 151, so I'm going up to maybe I should go to 157, 146. Either way, point still holds. I mean, there's a little bit of call skew here in the market right now. The question is the same, though. Is the market underpricing the options or overpricing the options relative to your expected outcome? And that is the only question that we have to ask ourselves.
No, I think they are fairly priced. I think they are. I think when you're looking at something where there's a lot of eyes on it, 34 million shares, options that are 20 cents wide, I think they're fairly priced. That's my opinion.
That brings into an offshoot kind of question. It's one of those, how come you see these small cap stocks? This is just me going on my own tangent here. Why do you see small cap stocks have so much, have the tendency to have much bigger moves around their earnings than mega cap stock? Is because there's literally less eyeballs on them. There's less coverage, analyst coverage of these stocks. And so it's news to more people. Fewer people are actually holding this particular, stock in their portfolio. So it's news to the broader public when something important happens and you get the outsized reaction. So yeah, I think that's also a really good point here. If it's a new listing and there's a heavy trading volume behind it, like we've seen in SpaceX, you can more or less take what you see. The open interest here, thousands of contracts open across the board. I'm looking at 3 DTE right now. This is the case if you go out to 10, 17, 24. I mean, pick an expiry out of the hat. You're seeing a lot of interest here, period, plain of story.
The more players you have in the game, the more fairly priced everything is. And you're right about those thinly traded things will move heavily on any type of news. That's why, like you said, the smaller caps do. While we're on Tesla or SpaceX, I'm sorry, when do you think, and you notice I said when, not if, when do you think Tesla and SpaceX when do you think Tesla is going to get merged into SpaceX?
Yeah, later this year, maybe early next. Elon's lockup ends, June 27? I think that's the full...
Yes.
The full kit and caboodle is done. So I would say, a year, within 12 months. Within 12 months. Yeah. If we don't hear traction by the end of this year, I personally be surprised. They actually named XAI to SpaceXAI yesterday.
Oh,
so
really?
You're seeing the slow merging of the brands all happening. And, if Elon wants that $1 trillion pay package, it probably makes sense to merge the companies.
And Frank just put something in the chat saying, "What?" And I'm going to ask you this before you look at it. What's next in Tesla, 400 or 415?
What's it trading right now?
I don't know. Let me look at it. That's actually funny. So we were on the road one time, and I'll never forget this. It's trading for a 408. So neither one of these are.
Oh, it's okay. So good question. Because if it's like at 420, I would say, well, probably 415 first.
Yes. So the question is it going up 8 or down 8? I love that you're thinking about this. This you can see steam coming out of your ears.
I mean, short term, it's choppy. I mean, can I give you an iron condor here, short iron condor here instead? Can we be directionally neutral? This thing has not made any. I mean, go back to the markets to May 1st. This thing is traded between 365 and 450 for 2.5 months now, and we're dab smack in the middle of that range. So
it is. We were on the road once. We met some viewers. This is back a little while ago, and Tesla, and I'll never forget this. I love when people think that they know exactly what's happening, because this guy comes up, he goes, if Tesla goes to 420, it's going to 620 the next month. And I was like, he's like, that's where all the open interest is. That's where everything is. It's going to go from 420 to 620. And I was like, I love it. I love people's conviction. I don't know where they get them from, but you can put your money where your mouth is if that is your conviction.
Yeah, so, speaking of a little bit of that conviction here, this has been a trading range for several months now, and we're sitting dab smack in the middle of it. The volatility in Tesla is pretty good still. I'm looking at the raw volatility of 53.5. If I wanted to go just beyond the highs and lows that we've seen in recent months, so below 365 and above 450, I could basically risk 3 to make 2.
Okay, so here's my
probability of profit.
And you're not asking, but I'm giving it anyway. Here's my only caveat with this, because I just glanced down. Are you in July or are you in August? You're in August, right?
I'm in August now, which puts us on the other side of earnings.
So I will have a hard time going neutral, very small, like small neutral past earnings, because what's going to happen is that August implied volatility is going to continue to inflate very slowly. So even if Tesla stays within its range, you might be able to take this trade off for a profit, but it's going to take a lot longer, because even though you can get there, I always said this, it's like running in sand instead of running on pavement. It's just you're working a lot harder for that premium to come out, because the theta is fighting, your vega and your theta are fighting each other.
And so at 38 days, however, Liz, that means as we get into Tesla earnings, that would be at 23 days to expiration that morning of. And so if I'm a short iron condor, right, and usually 45 and 21 out, we want to get out before the decay curve rolls over. I want to get out at 21 days.
You can't.
So going
what I'm saying is if you put it on, it's very challenging to get out at 21 days. Even if time marches on, the volatility will continue to inflate.
So you stay inside 21 here. You stay inside the 17-day cycle then.
If I'm neutral, I stay inside 17. If I have a directional assumption with a selling premium bias, I have no problem going to August. That's just kind of where I reside. If you're selling a put spread or you're selling a call spread separately, where they're not both sides, because what you need now is time to march on and volatility to come out of it. You're going to have time to march on and volatility to go into it. So if you're on and you're planning on taking it off at 21 days, it's almost like a battle. Now, people trade like this. They do it all the time, Chris. I'm not trying to talk you into or out of anything, but if I was trading Tesla, I wouldn't be directionally neutral going through earnings.
No, that makes a good deal of sense. That's a good heat check there. Then looking at it before earnings at 13 days to expiration, if you wanted to just ride this thing into the ground, is there 60-cent credit for $4.40 risk?
Once again, I would bring it in a little bit because you're staying within there. You're pretty wide out, but wrap it around the what's that thing called? The standard deviation move on both sides, right? So there you go. So it's just you're a standard deviation away. You're getting 129 on a $5 wide. That would be more my speed with earnings on the horizon.
Let's send it. Confirm and sent.
And I just talked you into a short-term trade. Good job.
We're learning new things these days, right? If the market keeps holding near highs, but fewer stocks are actually participating, how do you size trades differently? For example, would you cut position sizing across the board, avoid correlated tech trades, or use defimer structures even when you have a strong directional view?
So I think size is what helps you sleep at night. You can't buy the insurance when the house is on fire. And I'm giving all the analogies, and your risk is defined in order entry. So if you're feeling this and actually writing it down on paper, I would cut my size down across the board, right? And so sometimes when I'm doing things like that, I do cut my size down across the board if I'm looking at things differently. And all of a sudden I think it's near highs, but few are actually participating. There's nothing wrong with sizing down or closing some things or putting some hedges on. But a lot of times if you're trying to articulate this, then you might want to reduce your size. But I do think size is a personal question, Chris, and I think risk is a personal question because you and I might have we might have the same size account, but different risk profiles and different risk tolerances. But it is a personal question. But if you're articulating this or writing it down, I would say maybe pull your size back a little bit.
And for the first part here, do you size trades differently? Do you cut position sizing across the board? No, not necessarily. I mean, in 2024 and 2025, wasn't the whole complaint in the market that it was only the mega cap tech stocks that were pulling this thing up?
Yep.
And if you looked at the S&P 493, it was actually negative for the year. Right. Well, I'm trading ES. I'm not trading ES 493 here. So what are the biggest components of the indexes doing in that case? As long as they're holding up, then the index can move higher. But defined risk structures, yeah. If I have a strong directional view up here, it totally depends on the market. If we have low enough volatility, if the volatility curve is in a steep contango, if there's positive technical drift, I might buy out of the money call spreads to take a little bit of risk, and I can just go fishing and let the market do the heavy lifting. I'm not selling puts nakedly ever up here in these times. I might buy maybe buy a naked call, but like never ever selling a put up at these levels. That just to me seems insane.
And you're just saying in the general market, right? But there are we talked about this today when I was on with Mike, and I think you did too, with Mike and Jermal. There are cyclical things that you can go into and sell puts, right? So just the market is at all-time highs. You can take a look around. I think today we're down. Healthcare, insurance. We were talking about insurance. I think those names are the ones that kind of get the boost when the semis go down.
KIE, the insurance ETF, is at a new all-time high. This was a favorite little ETF of after the California wildfires that wiped out that Los Angeles neighborhood a few years. Was it last year? Dylan, Ilya, and I were talking about how this is the biggest loss in California's history, and insurance companies aren't taking a big hit because they're too big to fail. I only wish I had more in my pocket at $55. But today's the defensive stuff, right? So I'm looking at a name like XLV. XLV looks like it's breaking out, bottom left to top right. Right. I mean, that looks really good. I could sell premium 60 IVR, 61 IVR. I could sell a little bit of premium in here and something that's going up as opposed to trying to catch a falling knife. So the sizing to me, I really don't think about that. Is the chart set up there? Is the volatility there? Are the market preconditions there? If the answers are yes, then I get to the size.
Right.
And figure out what I want to do. It's so like the fourth question.
But it's almost like when you get a question like that, that is so, and like I said, I say this, my kids are 20 and 19, but whenever they're trying to tell me something and I'm getting like a half of a story, I always say, I need more sugar. Like, give me more information on this. And so with a question like that, you almost need more sugar. And I took it from the point of almost from a mom's perspective. If you're asking this question, then your size is probably too big.
Laura, we can go to question number 3 here. This is a 0DTE one.
Yes.
It just disappeared on me. For 0DTE SPX, how do you know when the credit is actually worth the gamma risk? Is it really about selling outside the expected move, or is the bigger edge knowing when the setup isn't paying enough to take the trade?
This is a great question because, and I think a little bit of it is challenging, and I would love TP to come in here and talk to me about this as well, because we've talked about this at length. A lot of these, they're bringing up gamma, they're bringing up all this stuff. Those zeros, you got to remember, the Greeks are theoretical Greeks, right? So when you have these zeros, some of the stuff gets thrown out the window. There's going to be a higher implied volatility because those options have to have some level of price in them, right? There has to be some price in there, which means there's got to be some volatility in there. So the Greeks in the zeros kind of get thrown out the window. So I look at them from saying the expected move is what I'm doing. The market is smarter than me. And if it's a liquid product, which SPX is, the market is pricing in where it's expected to be. If you look at where the expected move is, that's where I really hang my hat on for those zeros, because a lot of the Greeks get kind of jumbled up in that 0-day range.
I mean, I don't think most credits are worth the gamma risk in SPX or even in any of the 0DTEs, because you just, for how much risk is in the position, given how quickly things can move, you have to get paid quickly on it. So I know, for example, like when I started trading 0DTEs and started dabbling to try to learn them, it's a totally different style than how I normally operate in the market. I would start doing things like selling outside the expected move. And that can work on a lot of days where there's not a lot of catalyst. If you don't have earnings, especially these days, it's not just earnings here in the US. Samsung earnings last night are catalyzing today's market. Okay. So if you don't have that earnings, you don't have a Fed day, a CPI, then sure, maybe you stay inside the expected move. But on those days where you have those catalysts around the corner, a Fed speech, a Trump event that's related to tariffs, what have you, inside or just outside the expected move can realistically be more like inside the blast radius of the position.
It can be. It can be.
That's how I've experienced it. So, I mean, I don't think the answer is find a strike far enough that makes you feel safe.
Oh, no. Your risk reward has to be there because safe doesn't give you your
doesn't
reward.
exist. Safe does not exist in 0DT.
And the other thing with 0DTEs too, and especially because it says SPX after it, I don't know. I mean, I've got decent sized accounts, but I'm not zinging naked SPX, right? So no one I know is. These are defined risk. Every single one is going to be defined risk. So you have to find out how much risk definition you want. So no one, can you go to the zeros? Open up the 0DT and just sell whatever put you want. I just want to show how no one is doing this. Pick a put, it doesn't matter. Yeah, it's $149,000. No, there is zero credit in the world that is worth that risk, right?
I personally don't think so. I mean, look, there's a checklist here. If the credit is small, if you have a day filled with catalysts, and look back over your shoulder, if you've seen that recently the realized moves in the market over the past trailing 3 days have been higher than the implied moves, you probably don't want to do a 0DT expecting the market not to break the bounds of the expected move.
So I have a different opinion. I have a totally different opinion. Very different opinion because the research. So for years when I was on the SIBO floor, we would get a piece of research from Jacob and the mechanicalness of it really changed my mind on this because what he is saying, what they had said over and over again is lather, rinse, repeat. So if you're defined risk and you pick a strategy and say it's the expected move at 9 o'clock, you're selling a $5 wide put or a $10 wide put. Even on the days where there is news, but you just do it without fail, it winds up being a high probability trade because you're defining your risk, you're doing the high probability. Now, I would never do it at the money. You're going to go pretty far out. But so it was just kind of like these selling premium, not both sides. I will tell you that, not both sides. The iron condor can be blown out of the water, but you pick one side or the other. And if you do them mechanically without thinking about the macroeconomist point behind it or the numbers behind it, it can really work out. And I've had my kids doing that as well because they're good at blindly following it. I have the emotional saying, oh, there's a Fed meeting or, oh, jobs numbers coming out or, oh, this, I'm not going to do it. But they put it in without fail. And lo and behold, the market does what the market wants, whether there's news or not news. So if you're mechanical about your entrance and your exit points, it does work out over time. But that's what I'm saying. I like your trading style because you are a true macroeconomist. So when you take your opinions and you overlay complex option strategy on top of it, that's when the real magic happens. Instead of just blindly saying, I'm just going to do it every day. And
I have my heuristics, right? Because I'm not a shorter term trader. So I keep some rules in place to prevent me from over trading and doing things that I'm not comfortable with.
Right.
And so you're right. Maybe if I'm more of a 0DT person and could separate these thoughts, it'd be a little bit easier for me to take that into consideration.
It's been a fascinating experience for me having the research from Jacob and then trying to implement it with especially with my son because God bless him, he's very cute, but he doesn't know what he's doing, but he knows he opens it up, goes to the expected move, sells one, buys one, and closes it and walks away. And he's doing very well. So for a college kid, he's risking about $400 to make $100, which is insane when you think it out loud. But 9 times out of 10, he keeps it. So the 10th out of 10th time, he loses $400. But it makes, 8 times to make it up. And over average, he's made about $50 a day. So the mechanicalness of it, now it's only been about 9 months, but the mechanicalness of not thinking, sometimes I watch it go through and I was like, ooh, yikes, he did it today. We've got a jobs report, Powell's speaking. He doesn't know that.
Don't let him learn those things.
I know.
Please. Let it die with me. Okay.
No, I like it. I really like the fact that it's like your knowledge is so different than ours.
We have one more question here, and this really could go for both of us. You answer first, then I'll end us out. With gold getting pulled between the dollar rates and geopolitical risk, how would you decide whether the better option structure is a calendar, an iron condor, or a broken wing butterfly? Actually, Liz, I want to take this here. The first half of the question does not matter, right? It doesn't matter if it's dollar rates, geopolitical risk. That's all noise. If that stuff is real and important, it's going to show up in the options pricing.
Oh, thank God you said that.
The options, right? The options pricing will tell you then what kind of trade you should take out of the toolbox. If it's going to be something like a short iron condor or a jade lizard or a Super Bowl, right, Liz? So, I mean, geopolitics only matters insofar as the market cares about it. It's why a month ago, when oil started breaking down and the volatility collapsed, I was saying things like the war is over. Even though the bullets are still flying, the market gave you the signal that the war is over once the volatility broke.
Yeah, Chris, very well said.
See, I'm learning things from you guys. I sometimes I'm off on Wednesdays and there's a Fed meeting and I go, I just know they all think that I'm sitting at home with like a bowl of popcorn, just watching J-Pow. It's like, no, I don't want to know what's going on just so I can get rid of this stereotype. Okay?
We all know you do it. You know his every move, everything he's doing. We love it.
And the first thing that I did when I brought Luke home from the hospital was I sat down on the couch and we turned on the Fed chair meeting.
I believe
it. Literally the first thing. All right. I'm making a jerk out of myself. Liz, it's always good to see you in the morning here. We're going to take a quick break. Gus and Errol are coming up next. You've been watching Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Let's make this quick. I got to get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm going to go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We're getting a little bit of some volatile action in the market, volatility expanding a little bit here on the day. As we get into things, Brother Gus, how are we doing today?
I forgot it was Tuesday. I started to do the intro just now. I tried to run over you there. Yeah,
I didn't even hear you because I got this earpiece in the left one. So I didn't even hear it.
No, I just hit the what and then I stopped. But yeah, I mean it's so easy too because if I'm in that chair, I do the whoever's in that chair does the intro. It's literally that easy.
I had to think about it 3 times before.
Yeah, I always have to think about it a few times.
Different days.
Yeah, as the intro was playing, I was like, is it me?
Yeah,
no.
yeah.
But no, I'm doing good. Yeah, got everything moving in the right direction for me today in a portfolio context. A little sad about that game last night in a more macro context, but you know what? It's 2 months till real football season, people. It's right around the corner. We didn't care about this sport until 2 weeks ago, and I don't care about it again. So,
Cut.
No, unironically though, I mean, yeah, good little run. It is not a major sport for us. It was fun to see us, actually put on a little bit of a showing, give the country a little bit of excitement. I really enjoyed the unity that the team was bringing there for a little while. Hope it's a good rest of the tournament. Argentina goes off in like 20 minutes. I believe.
I'm really excited. Even though that was. I don't really have to get into the loss because the team definitely feels that one. I mean, just such a poor performance. And I mean, I don't want to dogpile on them because they had a ton of pressure on their backs. But I will say for the sake of soccer in America, I'm really glad what they did. I think the influence from the young generation is going to be a lot different over the next 10 to 20 years. And everybody remembers their first World Cup where they were like severely engaged because it can be pretty exciting. So from that perspective, I think that's one of the only ways to grow more homegrown talent in America is this needs to become a little bit more popular. I think people need to see the vision for why soccer can be an attractive sport. And then I think a lot of young players at 2, 3, 4, 5 years old will start getting into those academies at a younger age so that we can actually compete at a high level on the world stage. Because again, I think yesterday shined a light on the lack of experience and just the quality of ball that's played at that level. So
yeah, I agree. I think this will do a lot to inspire younger people and just kind of show the whole nation that we can be competitive at this thing, and maybe we should pour some more resources into it. And and like you said, I mean, the only other World Cup I really have good memories of, good meaning I remember it well, is 2014, which was the last time that the U.S. was in the round of 16, and we also lost to Belgium. And I remember watching that game live as well. So I'm becoming a Belgium hater at this point. They keep taking my happiness away. No, I've been to Belgium. It's lovely, but yeah, great effort from the boys, and we'll see what they can put together in 2030.
Back to some real Monday Night Football. You're saying no? I thought it was funny that the game was played Monday. I was like, Monday Night Football.
Exactly. Yeah, same start time too. But
yeah. But no, with that being said, we can go ahead and jump into the Tasty platform here. We'll do a little tour to market, see what's been going on. Market's been selling off on the day, as you can see here. And then also we have volatility expanding a little bit more. And then another link that Gus had sent me this morning was the headline with the Iranian attack in the Strait of Hormuz. Am I saying that right?
Hormuz?
Hormuz.
Yeah.
There we go. Every time
I hear some people leave that H off and go Hormuz as well.
Nobody's corrected me. They've always looked at me kind of funny every time I said it. So
I did have to look up this pronunciation and make a TikTok some time ago. Yeah, because I knew people would obliterate me in the comments if I dared to pronounce this word wrong. Yeah, exactly. Yeah, could work. But no, Hormuz is correct. Yeah.
Hormuz, the Strait of Hormuz. So another Iranian attack causing oil to catch a bit on the day. And I mean, it's a long time coming because we've seen a lot of downside action on the overall oil market for quite some time now, especially after the significant rally that we put in. And if we zoom out to a larger time frame chart, you can see exactly what we're talking about here. So as we consolidated down here at the lows, I mean, it felt like watching paint dry a little bit here. We got long a little bit early in our position. Let me go to /MCL, the smaller oil product there. But we had gotten long into one of these positions here. And now that we're catching a bit to the upside, it makes us feel a little bit more comfortable. Unfortunately, for some of the positions that we have on in the USO product, is still down a pretty significant amount. We had purchased a 110 call expiring July 17th for oil. And then we sold an out-of-the-money put spread $5 wide. We collected about $1.70 on order entry there. So these positions are down. They got a little bit more time under its belt. If we continue to catch a bit on USO, we should see some better upside action, I guess, for lack of a better way to put it. We'll see what happens there. But able to take advantage of the MCL futures contract there. That's nice. That's kind of hedging this USO position a little bit more. And if we make new lows in the oil market, I'm going to go ahead and cut this position. So if we make new lows, I don't want to continue to catch a falling knife that it's kind of felt like I was catching just for a little bit there. But we're going to hold on to that one a little bit longer. And then with some of the downside action, apparently the US losing was bearish for the overall market because literally right after the game was done, the market continued to sell off lower. Obviously, I'm joking, but the market continued to sell off a little bit lower. Was able to get some more opportunities off of some of the levels of value that we had marked off over here on Nasdaq that we'll get a little bit more into as I accidentally move this. This should be at 29,900 for the value area high. But we were getting short somewhere up here. Market was looking pretty weak. So I was like, you know what? We'll probably step inside this level of value. If we would have made new highs, I would have cut the position. But we ended up selling off a little bit lower, attacking these lows that's sitting inside that level of value there. We had also purchased a QQQ put yesterday as well, just seeing some of the weakness in the market. The market could have continued higher, but another thing that we were paying attention to was this kind of swing high that, I got to go back to QQQ, was this swing high that we were sitting inside of right over here. So if we draw this price line over here, this was really what we were paying attention to because although we got that rally to the upside, we just wanted to see, which way the market was going to break, to the upside or downside, because you can kind of see that range that we're sitting in. And then we also purchased a QQQ put, but I took that off at the open and I could almost kick myself because it feels like I missed the meat of the move. And that's those natural emotions. You catch a good piece of the market and then you always feel like you missed out on a little bit more. But I took it off at open and the market continued to sell off lower, taking out last Thursday's swing low. So putting a little bit more fear in the market, volatility expanding a little bit more there, but that's what we were looking at. I have no more short positions on the market as of now, just because this was a pretty steep move. And again, even if we do zoom out there, we were trading at these levels at the beginning of next week. So who knows? By the end of this week, we could be back at the highs. But that's what we did over here in the portfolio. And then SPX or SpaceX. I'm sorry, SpaceX. SpaceX has been very lackluster, just kind of sitting on that position, letting it ride for a little bit, but trying to collect some theta on the way. It is an out of the money put spread that we sold, so it's nice. It's a premium position, but it's a little bit boring on my end, guys.
Yeah, maybe we got to start calling this Space Exploration Technologies Corp to really, keep the two separated. Because I also do the SPX SpaceX confusion a lot. Yeah,
100%. I think we got to do that.
SPX. Yeah, Space Explorations Technologies Corp.
What Gus said.
So we'll be calling this for moving forward. Remind me what your strategy was in USO.
Oh, USO. It was very similar to just the market had been a little bit oversold to the downside, so wanted to get long there. USO was one that I had gotten on a little bit earlier. Whenever we continued to sell off lower and lower and lower, I recognized I was early on these positions. So then that's why I felt confident to take the oil futures contract because I recognized I was so early on the USO positions. But that was pretty much the entire idea.
Sure. So you went for, that's basically just it's a what, 105, 110
it's a,
put spread with a 110 call just on top of it for good measure?
Yeah,
I think sprinkle of sugar?
Yeah, it was actually, that out of the money call was added, I think maybe 2 or 3 days later. So it wasn't necessarily, it's all one position, but it was an on-order entry.
No, yeah, I have lots like that.
Yeah.
I'm short Rivian against my long Rivian.
Yeah, no,
right
exactly.
Now. Yeah.
You kind of have individual positions on that one overall position.
Yeah. Yeah, and I do that a lot too, and kind of attack different things differently, and then you gotta every time you pull this up, you gotta like piece them apart. And think, okay, well, what was my thesis here, and what was my thesis there? How should I manage this? Yeah,
and a little bit of the thought process behind selling the added money put spread, and then also buying that call was if we were to get that initial pop in oil, it would have been nice to take advantage of that directional move with buying that cheaper contract and not selling it. And it's like we could have then just taken the call off and then let the added the money put spread ride because it benefits from theta decay over.
Well, yeah, I was going to say, I mean, it's basically like a synthetic 2x1. You just don't have to post up the $2,000 of buying power, whatever it would be to sell an extra one of those 110 puts. That makes sense.
Yeah. But yeah, no, that's what we had going on today. I'm glad that oil again is getting a little bit of a bid because it was getting a little quiet. And when things get quiet, I don't know how I feel about that. Like, are we going to put in another leg to the downside after we load up more positions here, or are we going to finally get that pop that we're looking for? But it's looking like we're getting that pop. If we can trade at around 71, 70 on oil, I'll get out of this position. This one's going to be a boomer bust. If we make a new low, then I'll use my stop loss. I think right now I'm long. I'm not sure why it's not showing the order, but I'm long at about 67.89, I believe. So if we make a new low in the market, I'm gonna get out of that one just because these futures contracts can get pretty aggressive against you. It's not gonna expire in my account. It's gonna keep pulling that account down until you manage it. So
yeah, oil definitely a larger downward bias right now too. We're catching the little jump here, but yeah, don't want to take your eyes off that one for too long. Exactly. What's going on?
What's been going on in your backyard? As I know you're getting to some of those comments there.
Oh yeah, I was just gonna pop off some of the chat here. What's going on, everybody in chat? E-Media, Big Deal, Theta Trader, Grumpy Mike. Good to see all of you. Lots of Ted Lasso references happening. I see Big Deal missed one. I would have missed it too. I haven't seen Ted Lasso though. I hear it's very good. Perhaps
dare I say, who is Ted Lasso?
Oh really?
Before I get absolutely roasted in the comments.
No, this isn't some like iconic like 80s thing or whatever. It's just Ted Lasso. It's a show on Netflix or I don't know, one of the streaming services. Somebody can let me know. But it's a recent show about a fictional soccer team or is it about Wrexham? Is it about a real soccer team and the show is just fictional?
It's giving me Lazy Town vibe. You know what I'm talking about?
Sure, yeah, I could see that.
Just off the first image that I see right
there. Yeah, no, it's just it's like a drama comedy about a American guy who has to go coach a European football team. Okay. And it's like it's the whole.
Does he do a good job?
Arc. Apple TV. Yes. Thank you, Mr. Pillows.
That sounds like that's quite the stretch. Does he do a good job as an American coach?
I think so. I think that's the whole thing. And I might be speaking out of turn here. Somebody can correct me if I'm wrong. Like I said, I haven't seen the show, but I think it's like he takes like an American sports mentality to them and like he's like talking in like basketball terms and stuff. I don't know. I might be totally out of line here. Like I said, everything with a grain of salt. Wrexham. I know Wrexham is a real team, but is Wrexham the team in Ted Lasso, or am I mixing that up? Is it a fictitious team in Ted Lasso? I'm not sure. But yeah, it's good. You'd probably enjoy it. A good soccer show.
It's on Netflix.
Yeah, it's Apple TV.
Oh, all right. No more. Apple TV is a sleeper. They actually
they have been stepping it up. Yeah, they do have some good stuff.
Yeah, what's been in your backyard? You were talking about Rivian the other day.
Yes,
on its butt. You were talking about that channel that it typically trades in and how it usually behaves.
Indeed, yes. I would be remiss if I didn't lead off talking about Rivian here. Yeah, it's Rivian. Rivian is doing the Rivian thing.
I mean, you hit it to the T.
Oh yeah. Here we go. Every time Rivian starts moving up, they find a way to immediately shoot themselves in the foot. This time around, they issued 75 million new shares to raise capital. In a longer term bullish context, which is kind of how I view Rivian. I am a long term bull, even though I will take these short term bearish trades. I don't really know that I mind them issuing these new shares. I think in the long term, when it all shakes out, it'll probably be fine. I'd rather them have the little bit of cash on hand. But in the short term, obviously that is dilution and the market is not going to like that. We opened about 10% lower and have continued sinking lower all day, down about 15% from yesterday's close, now trading at 17.15. And yeah, I mean, it's just, here we go. Rivian, this is what happens every time we go test this 18, 19, 20 level, it just gets a affirmative rejection straight back down to the lows. I'm hoping that we'll continue down to the lows here. I know some people are in this position alongside me, but I have a 16-15 bearish call spread at 17 DTE. I put on 10 of these because they were very cheap. So actually going to go ahead and scale out of, I wasn't even thinking about the fact that I had 10. I'm going to scale out of
a great time too.
4 of these. I don't want to do exactly half. I'd like to keep some on because I do think the down will keep coming. But as long as we're up, 20, 30% on this position here, I'm going to go ahead and take off 4 of my 10. So leaving 6 of those to run, 17 DTE, which is July 24th, looking for a return to sub 15 for Rivian. If we get the sub 15 level anytime before then, I'm just going to go ahead and take these off because on the other end of this channel, it always bounces straight off the 13, 14, 15 level. As soon as we test those, we just go ripping right back to the highs. So I'm not gonna sit around
and break even on this one.
Yeah, no, this isn't one where like lots of the stuff I do, I'm going to try to squeeze out every last dollar of profit that I can. If I see a number below 15 next to Rivian, I'm just going to take these profits and keep it moving. And go ahead and taking off 40% of my risk there with that exit as well, and profitably so up. Something to the tone of 30% on these right now after the big down move today. So I'm content to take that. And at least leave some others to run. Leaving 6 gives me room to get out 3 and 3 if I want to continue to scale.
You feel better emotionally now that you're more often.
Yeah, exactly. Yeah, so lock some in. I can't do all the quick math off the top of my head, but probably covered the cost of like 2 or 3 of these other 6 with that exit. So there's a little bit of house money in the equation here as well. But yeah, here we go. Rivian. It's the most classic Rivian thing ever. I say it every time Rivian goes up. I say it every time Rivian goes down. If you're not taking advantage of this channel, you're missing out. Rivian loves to run between these 2 numbers.
This is the epitome of what goes up must come down. What goes down must go up. That's Rivian in a nutshell.
Thank you, chat. Welcome to Wrexham is not the same as Ted Lasso. 2 different TV series. That's why I'm associating Wrexham with TV
series.
And there's Mr. Pillows. I've been thinking about your Rivian position. Good, Mr. Pillows. Yeah, happy you're in there with me. Things, going swimmingly for us right now. What's going on, Ranch? Good to see you. It's a fake team. You need to watch it, says Darren. Okay. Everybody bullish Ted Lasso in the comments. I would like to watch it. I just don't do a lot of TV in general. There's lots that I would like to watch, but I've heard it's a great show. I've only ever heard good things.
Yeah. Rivian doing Rivian things. What's funny about selling these shares on the inside? Usually when it's like a crappy company, selecting words carefully there. Whenever it's a very crappy company, whenever it's like under $10, whenever you hear an offering or whenever you hear the company is selling shares on the inside, that's like death to the stock. but it is interesting to see whenever you have a company that has good fundamentals and is a legitimate company. I mean, we see Rivians driving around on the streets. I mean, there's a Rivian garage, I think just a few blocks down, that I ran into outside of the studio. So with it being such a legitimate company, it is funny that the perception on the company selling shares from the inside to raise capital is seen completely different from a small cap standpoint into like a Rivian standpoint. And when I'm saying small cap, I mean anything from like $1 billion and under. Like that's very small for the stock market. And it is just funny how the perspective and the emotions about hearing the company selling shares on the inside is just completely different, because all hell breaks loose whenever a crappy company does it that's very small. And oftentimes these smaller companies will like to do that because they recognize my stock I don't know when the next time my stock is going to be at this price point. So a lot of times they take advantage of that to sell some shares off onto some of their investors. Sometimes it's kind of a murky waters there. But anyways, to see Rivian do that, I think that they're going to do great things with whatever extra cash that they have on.
Yeah, I agree. And like I said, I mean, in a like 2-year sort of time frame, I have no doubt that Rivian will do the right things with this capital. And it's a capital intensive business to be in, trying to manufacture electric vehicles.
Make a roadster.
Rivian doesn't have like a real sporty vehicle. They could break into that if they want to, especially as they try to capture the luxury EV niche a little bit more.
Do it, right, to the point you made the other day. I mean, Tesla again is trying to shift into more of that Honda narrative, more of that Honda type play. So somebody can come swoop up the luxury EV market.
Make sports car. I'm sure they could do it. But it's an expensive game. You need battery factories. You need assembly plants to put all the things together. The batteries are usually the biggest bottleneck for these EV companies. I must admit, I'm not sure exactly what the bottleneck is for Rivian, but more batteries never hurt an EV company. And they've upgraded their delivery estimates through the rest of the year. So production's already going well, and it's only going to get stronger. I do like it for Rivian in the long term. But yes, in the short term, obviously, empirically, this dilutes shares. So you're going to see.
From a trader standpoint, volatility is opportunity.
Yes, exactly.
What else you got on top of mind for you?
Baxter International, BAX. This is one that I've mentioned before, and I actually went out of my way to make sure I could thank the specific congressperson who gave me this trade. Shout out to House Republican Michael T. McCall.
Okay,
who put this one on. I saw him grab $300,000 of this back in March. Thought that was very strange, especially because I'd never seen his name pop up before. And whenever like these, if you keep up with the Congress trading list, you'll see the same names a lot. And a lot of them I don't even think are like being shady. They're just very active traders. Lloyd Doggett, Gilbert Ray Cisneros. There's Ro Conan or something like that. It's another one that I'll see all the time. There's like a regular cast of characters here. So whenever I see somebody that's not usually in that cast of characters pop up, I always give it a side eye, and particularly when they're throwing around six figures, like this House Republican David Taylor. I've never seen him before. Bought some Chevron, but he bought $5,000 of Chevron. I don't really care about that. That seems like a reasonable investment. So there's levels to it. But whenever I see
get your bread up,
whenever I see an unknown name buying a lot of something, the alarm bells start to go off. So I blindly followed in this Baxter trade. I just have one January 21st, 2028. 35 call. So gave myself plenty of time. I was like, I don't know what the thesis is. I don't know what this guy might know or not know. I'm just going to give this plenty of time. It's an S&P 500 company that's coming off its lows. It shouldn't really be a terrible buy in the first place. And there was like a month there where I was like, what are we doing, Mr. McCall? We're
a fat finger?
Running sideways here. Yeah. Did you fat finger this? There's two of them actually too. It was a 250 and then a 50.
Oh.
So I guess couldn't have fat fingered it. But now I see whatever he was seeing. I still don't know what's happening to drive this company up.
Trust the process.
Yeah, but sometimes it's just that simple though. Sometimes you don't have to know what's happening. It's just shady is a little shady, and all of a sudden here we are, sitting now. 30-40% higher than we were off those lows when I initially scooped this. So going very well on Baxter. What even was my spot on this? Let me see. I entered this.
I was waiting for Nancy Pelosi, but no, you caught me off guard with the other name.
I did take one of them off. I entered two of these at 155 each. I took one off at 230. On the 2nd of this month as we started this climb. So I'm just holding my one runner now, 155 average, currently trading at like 230. So we're up,
go to the moon.
About 50, a little over 50% here. Almost exactly 50%. So we continue to climb. I don't know if this 35 strike call will ever be in the money, but with 2028 as my expiration cycle, I have plenty of time to let all this play out and see if we want to fill this next gap up to the 28 level. So shout out to Baxter.
100%. I mean, 35. We were trading there just end of March, beginning of April. So it feels like we're such a far from a price point standpoint. It feels like we're so far away. But honestly, from a time standpoint, you can see how much ground this thing can make up in a short amount of time. So,
do you believe in miracles? SPX back to 75.50 by the end of the day.
Do we believe in miracles? SPX back to what was the number?
75.50.
75.50. Okay, where's that sitting right now on the chart? 75.50. 75.50. 75.50 here. Oh, back to the day high. Do we believe in miracles? How much time do we have left? Today it's 10:30. It's 10:53 Central Time, 11. We got 4 hours left in the day? Yeah, I mean, that does not seem very far-fetched either.
It could happen. You know, in this market, it could happen. The funny part is I don't even know if I would call it a miracle in this market environment.
Another day in the office.
I mean, it's statistically improbable, but I don't know if I would use the word miracle or tail risk. It feels like that's. I mean, what is the what's the expected move here on the 0 days?
Let's see. What are we looking?
75.25.
75.25.
So 75.50 is just inside the second standard deviation. So. Not quite technically tail risk, but that is, we are moving towards the tail there. You know, in a bell curve context, we're pricing in 5 or 6% chance of getting to 75.50, but it could happen. There are worse chances. Betting on a single number on a roulette board is worse. Believe in something.
I mean, I'm curious what we were pricing in this morning, because I'm not going to lie, the market's selling off to the downside. I was a little bearish, but I did not expect us to fall that far. I guess I'm a little still bitter from covering that position right at open as we continue to sell off lower. But I'm curious what the options chain was actually saying in the morning and what the expected move was before we put in that downside move as the market opened up this morning. So anyways, with that being said, I think the volatility is there. It could do it. It could happen. Maybe Trump wants to come out.
Yeah, you're one tweet away. You're always one tweet away.
I mean, you're literally one tweet away. I mean, especially with Trump getting involved lastly with the USA headlines and, you know, the cards. It's just so funny because from a market standpoint, we understand anything can happen. Any headline can happen. But to see that in sports was kind of just funny that legit anything can happen. Because if you think about it, if you're a sports bettor, that probably changes. It's a different type of trading, I guess you could say. That probably changes your expectations a little bit. And it's like, if I was a trader and Trump said something about the Strait of Hormuz, that's going to change my expectations a little bit there. So anyways, with that being said, expectations, 75.50. Maybe we get there. 4 hours left.
Yeah, and those two things, trading and sports betting, are very similar. No, neither party wants to hear it, but it's all. If you're doing either one right, it's all. I mean, small size, law of large numbers, 1% edges make money over time. It's the exact same principle.
Yeah, and then again, we got the headlines, right? Like that.
Yeah,
I haven't sports bet myself, but I can imagine seeing certain headlines in sports would change my certain levels of confidence and conviction.
Oh yeah, and much like the market, if you are somehow on the ball enough, you can beat the market to that information before the lines move in. Actually, but it didn't pan out. But when the Balogun red card got lifted, I raced in to bet USA to advance at -110 because they still had the game at a pick. And then 20 minutes later, that moves to -140, and then it was out to -160 by the time the game was played. And obviously, it didn't pan out for me. But there is CLV, there is inherent EV there, and yes, it's very similar. If you can front run the market on the news, you can take advantage of that.
Trump should have hit me up, man, before he told me. Come on, Trump. Come on, man. Nah, with that being said, what else we got? Anything else kind of catching your attention today?
I suppose the only other one that I would flag, just because I haven't talked about it since I put it on, is Alit. ALIT is the ticker. They just did a reverse split. So I'm in a whole interesting situation here. You can see a nice run happening. I forget it was months ago now, 125 days ago, in fact. So not quite last year, but 4 months ago, somebody shouted out Alit to me in chat when I joked that I was looking for some pennies to throw on. I am pretty much exactly at break even on this, but I have a weird situation. So I had 50 shares. They did a 1 to 10 reverse split. Okay. So that took my shares down to 5. That's clean. But I do have a pre-split 5 call, which is actually 50 now, is the way that translates. So I have the weird NS tag. I'm sure you guys have seen it if you've ever held an option through a split before. So fundamentally, it doesn't really change anything, except liquidity is going to be really, really weird. I might have a hard time getting out of this. I considered not holding it through the split, but it was basically at 0 anyway, and I figured that the split would do something like this. So I decided it was worth taking a shot. I don't know. We'll see if I'm ever able to get out of that 5 call. But my now 5 shares, formerly 50 shares, are at exactly break even, down 60 cents. That's not an option, 60 cents. That's 60 cents as in I'm down 12 cents a share. Just moved into 38 cents. We're down 3 cents a share. So closing that gap there.
Teetering that line.
Hoping for some more upside. I bought this because it was a penny. It's now split and it's not technically a penny anymore, even though nothing has fundamentally changed. It's a whole weird situation. All I know is there's a gap to fill up to 25. So let's do that.
Pretty big gap there too. And yeah, now this has a lot of momentum off its bottom so far. I mean, 4 or 5 consecutive days to the upside. We're putting in larger ranges that we've seen over the last couple months in here too. So maybe things are starting to expand. Maybe we can get it. We got that gap to fill to the upside. So a lot of, and then again, because it's a cheaper underlying, it's not to understate the percentage moves things like this could put in. Just like with Rivian being down $1.50, it's down over 10% on the day. It's 15%. So everything's relative for sure.
Yeah. Oh, thank you, Robert in chat. SPX expected move at open was around 31.
Was it around 31? I'm actually really curious. Let's quickly see where that was at, and then we'll take a quick look at VIX before we wrap for the day. Was that 31? Is George saying?
The expected move was 31.
31, yes. 31? 31. Where was that at this morning? 74, 31?
No, 31 points.
Oh, 31 points.
Yes.
Okay. Let's see. And we opened up at, where did we open up at? SPX real quick. We opened this morning at 8:30. Okay. It's looking like we opened here, 75.16 we opened up at. So what, 30 points from there is going to be what, 45? 40, yep.
Well, no, it would be 85.
Oh, 85.
Down.
Whoops.
Yeah.
5. So we've, I'm like, where is this thing at? At 85. I mean, we've almost
so
bottomed right around the
I was going to say, how about that? How about the market? The market technical is just working perfectly.
All right, the math is math.
The math works. Math checks out. Robert knows his stuff, confirmed.
As I started to look at the rest of the scale off to the right side and started to go down, I was like, oh, wow, we really bought it.
Just right there. Yeah, how about that? Anyway.
With that being said, let's quickly check out the volatility index before we wrap for the day, guys. So far down on the day as the market is recovering here, we put in a high on VIX at around 1664. So the 1610 VIX we're sitting at right now, we're on the 1 minute chart. Let's go ahead and zoom out to the daily, at least get a better perspective there. Sitting at the lows, volatility absolutely getting crushed, but that's great for some premium positions, managing some positions on the day, taking a little bit of profit. But we are running out of time here. Anything else top of mind before we wrap for the day, Gus?
No, nothing else for me. Rivian, I stay on the train of Rivian to the earth and then back to the moon. That's what we need right now. So hope we make some more legs down there. And Baxter International, keep doing what you're doing. I don't know what it is. I don't know what the company even does in the first place, but keep doing it. It's going well.
Absolutely. We just manage our risk. I don't know.
Yes.
With that being said, guys.
And congratulations, Ranch, on the SPX 0 day. Clap it up. Claps for Ranch. Thank you. Good job, Ranch.
Ranch.
All right. That's all
Grumpy
I got.
Mike's back there. No, with that being said, guys, thanks for taking the time to hang out with us for the day. There we go. In the chat. Thanks for taking the time to hang out with us on the day. We'll be back managing these positions for the rest of the week. Be sure to stay tuned for more amazing content coming on next. We'll be back in a couple hours and we'll catch you guys next time.
Hello, Tasty Nation. Welcome to